Banners up. The mic is on. All right, we're live. We are live. Let's see if it gave me a notification. It did. Okay, it's working. What is going on, family? What is going on, awesome individuals? All you trader warriors, right? Not warrior trader, but trader warriors, right? Uncle Jocelyn, Peace, Power, and Profit. Coming to you guys live today on the YouTube, cranking it back up, right? Knocking the dust off it a little bit. We kind of been, you know, neglecting our YouTube side of the house recently because we've been focused on doing a lot of other things. And that happens from time to time. Just let you know that we're not necessarily, sitting around waiting to kind of, bring value to YouTube, even though there's nothing wrong with that, because this is where we all come hang out as well when we're trying to, corral around some opportunity, right? Especially when it comes to the markets, right? So, of course, what better way when you can hang out with your peers, right? Your trading peers, and we can, brainstorm and strategize together. So again, we want to get in the habit of, firing the YouTube back up when necessary. And I think it's a great useful tool in that perspective. But again, obviously it's not a daily regimen of mine because, we got other things we're trying to accomplish. So happy to have you guys in the house. Happy to have you in the building. Been a minute. No, I haven't, again, seen some of the faces that may pop in and out. But again, you guys have seen me in other, avenues and other venues. So not like, kind of been off the planet lately. So so the market is doing what it's due. Of course, we have the IPO day, of Robinhood. We have, family coming in. We have an awesome over, Chris Woods in the building. Go subscribe to his YouTube channel, right? You know how we do over here. We support the tribe, right? We support the tribe, right? Stop playing. A like costs you nothing. A subscribe costs you nothing. Stop politicizing likes and shares. I repeat, stop politicizing. Share, like, subscribe. Again, hang with the people that you love coming around anyway. So, just want to put that out there. We have the awesome Miss Illustrious Miss Play Hot in the house, right? Play Hard Adventures, right? Definitely go subscribe to her YouTube channel, right? Again, awesome content creator. I can't never say that enough and stress that enough because, again, the sister's very talented, it's loaded in talent, right? And, again, you want to be around people who are always edify and bring value, content value, just all around great people. She is that, then some, right? So definitely go subscribe to my sister Play Hard Adventures. You see her definitely in the back chat there in the YouTube side of the house. Don't hesitate. Go subscribe to her channel. We have Oba Brother Mathis in the building. Peace, power, and profit to you, Oba. Happy to have you here as always. I know you've been, strategizing, watching this market like a lot of us. Again, it's a money day for a lot of us because, again, we wake up with ambition and opportunity at our feet. Literally, it's up to us to take a step towards it. So, of course, we do all the right things and, make sure our discipline is on point and our due diligence has led us to the right place. Then, of course, we can eat thoroughly as we should when we are engaged in these markets, right? Again, that's what we're here for, right? So shout out to you, Brother Mathis. Peace, power, and profit to my family. Knowledge, one love in the house. Power and profit to you. Hope you're having a great Thursday, right? Throwback Thursdays, like to say, or we like to say, throw it forward Thursday, right? Because especially if you're trading this market, we're trying to set opportunity up for the next day, so to speak, right? And so it's always a great thing when you can, again, utilize what you have to help you get to where you need to go. And so these markets are no more than a vehicle, right? It's a lane, and we're just trying to use these financial vehicles, these stocks, these assets, these Forex, crypto, whatever, to help us get it from point A to point B, right? And obviously, when we settle, we'll end at point C, which is the cash, right? We'll end up with the cash, right? So that's what it's all about. Peace, power, and profit. Oba Brandon Jemison in the house, the Oba resident hospice in the building. Shout out to you, Oba. Hope you're having a great day. I know you getting it in. We had a great build last night, man. Phenomenal build last night, guys. If you did not catch that interview we did with my brother David Gerald on the Dagger Squad channel, you might want to go watch that. We talking about pure motivation, pure solid brother, pure opportunity to really, again, get your entrepreneur juices flowing because that brother is, phenomenal. Definitely watched that brother grow over the years. So again, I'm always happy to be around awesome people. So, got to go watch that if you missed it last night. The Dagger Squad YouTube channel. Go watch that interview we did last night. Me and Sister Monica did for our brother David Gerald. All right. Peace, power, and profit over Zane Montego in the building, holding it down. Right. All things knowledge and power himself. happy to have you here over. Hope you've been strategizing and watching this market too. Again, like I said, we spread out our net wide, right? Y'all know how we go. We don't box ourselves in. We like to kind of, meet people where they are and say, hey, you checked out this market stuff yet? You had any idea of, of opportunity that you can walk into where you just need a little bit of knowledge and a little bit of, little cash to get started, and we can, get you going from there. So I hope you guys starting to kind of really set root in that ideology and increasing your wealth to want, mental wealth to want to be a part of this awesome industry. Because let's face it, guys, after what we witnessed in terms of 2020 and COVID, I mean, what else is out there, really? What else is out there that really don't have the level of disruption that a lot of people are experiencing? You go back to work, you can go back home. You start your business, it can get shut back down. I mean, there's so many things. Of course, I'm not saying don't follow your dreams and aspirations in that lane. But outside of that, too, that's why we say you have to have multiple streams of income, because you can't depend on one to carry you, right? Obviously, right? We're too old to play that game inside of our head now, thinking the job is the only thing that's, great for us. So, again, what else is out there? Right? Again, we're talking about a turnkey business model where, again, you can put your couple of dollars away and just kind of watch it, right? Structurally, set some goals in place for it and just watch it, do its thing, right? Letting your money work for you, all right? As we like to say a lot of times, right? Well, now's the time to get used to doing that and be excited about allowing that money to work for you, right? Because they've proven, if nothing else, they're going to protect the markets, right? They may not protect your job. They may not even protect your health very well. They may not protect a lot of things, but one thing they will do is protect their money, right? When I say their money, I mean those who are controlling stakeholders in the Corporation of America. They're always going to funnel their attention towards, the markets. Right? That's just how this stuff works. The Feds, et cetera, right? So all the stuff that we're going to talk about there a little bit in terms of the inflation. The induced inflation, I'm going to call it what it is. It's an induced inflation. It didn't necessarily happen on its own. It happened because it, kind of was kind of egged on into that environment where now they're kind of, the cat's out the bag, right? The cat's out the bag. So I'll just say that, right? All right. So again, a couple things to talk about today. Of course, this is not going to be a long, drawn out scenario, but we're going to cover some topics that I think some of you guys are maybe interested in. If you have questions, definitely make sure you post your questions. You're able to come onto the panel, you can. I'll get the links so you guys can come on the panel as well if you want to discuss any trades, anything that's, surrounding this infrastructure bill that just obviously got some votes. I'll say that it got some votes. I'm not going to say it passed and all that until the ink dry, but the infrastructure bill that's on the table, and definitely this, this inflation that seemingly starting to kind of really pick up, right? No matter how they try to beat it back down and say it's the transitory, whatever, right? We know better, right? So definitely we're going to discuss that as well, and many other topics that may be on your mind or whatever that you want to discuss. So let me get the link here so we can get you guys, that want to come on to the panel. You'll have access to it. Let me get that here. And we'll get this thing popping. I'm happy to have you guys again tuning in today. Again, it's been a minute, right? It's like, where you been, brother? I've been around, just been working, right, in other avenues. So, but definitely good to come back before the YouTube family so we can build, and edify each other with some knowledge, right? So shout out to everybody who's in attendance. Again, those who find value in this, definitely, if you don't mind, like the video, even share it, right? Because you know how we roll over here, right? All right. It's about building, right? Trying to lead people to opportunity. So we don't sit around just talking for nothing, right? We're definitely trying to make a dollar out of 15 cents, right? As the old saying goes, right? Trying to make a dollar out of 15 cents. Let's go, right? So again, let me get this over and out to the family, and we'll get this thing popping. Okay. Yeah. Okay. Make sure. Okay. Got it over there. All right. So the link is out there, guys, and feel free to come on if you're able to. If you got any questions, especially over there on the YouTube side of the the Facebook side of the house, where I'm also streaming this here, don't hesitate as well. Let me get the link and put it over there underneath that that as well. So you guys, if you want to come on, if you just kind of stopping through, I know you guys are busy. A lot of you all, you're welcome to definitely come through and and be with the family today. All right. So get that over there. Everything's solid. All right. So yeah. So let's get at it. Right. So COVID is still on the table. Nothing has changed there. Right. We still dealing with COVID. Right. Same issue, different president. Same reality. So nothing new there. Again, where do we go from here, as they say, right? We're trying to make sense of it all. I've got Over Chris and popped in here. Hold on 1 second here. All right, Over Chris in the building. Peace, power, and profit. Over, what's going on today, man?
Peace, power, and profit. Over. Just looking at all this turmoil in the market.
Right, trying to make sense of it all, right? Real sense, right? Real sense. Joking, like when we say sense, we talking about real sense, right? Some people don't understand that, right? Got my cousin that popped in the building. What's going on, Over Marcus? I see he on the road. Got that mask on in, making moves. I see you. We're just talking about that.
Yeah.
I love it. Right? Ilba Angie in the house. Good to see you, Ilba. Right? Sister been making moves. I know you've been busy. So again, shout out to you, Sister Ilba Angie, as well. I know great things are happening for you in that beautiful state of Florida down there. Right? Moba, he down in Florida too, of course. So happy to have a lot of people popping in the house today. Y'all looking awesome as always. You awesome individuals. Right? Again, just having this natural conversation like we always do. Everything had to deal with trying to get a bag. Y'all know how we roll over here. Nothing changed, right? It's all about trying to get a bag, because when we can make those things happen on our own, man, a lot of things happen when we're in the position to do that. So just focusing on our skill sets, focusing on the training, focusing on, again, learning how to read the tea leaves, as they say, understand this market in a way where we can dumb it down, right? That's what this is all about, right? Learn how to dumb it down to make it make sense to us, dollars and cents, right? And so I'm excited for that, for anybody who's new, anybody who's going through the training, anybody who's obviously more advanced in their trading, or whatever the case. We know there's a lane for everybody, right? And we're just trying to feed off each other as we should, because it's us against the suits, right? As they say, right? Now, we don't have to be the Wall Street bets type, but y'all know what I'm saying. It's us against those who control the bag every day. So I'm excited to kind of, again, always be able to come on, build, share, learn, earn. Y'all know the whole reality, right? This is what we all about. So shout out to you all. So yeah, so we'll get at it, man. So again, today is today. What's going on, family? Quavo in the building. I see you in the back chat over there. Peace, power, and profit to you as well, over Jay Shelton that came through in the house. Peace, power, and profit, family. Salute, man. It's been a minute. Happy to have you in the house as well. All right. So he said, what did you trade today? I had a couple trades out there, what they call intraday trades, right? I had some swing trades that I had on. TAL was one. That ended up being a nice little bounce trade. I ended up buying it, option call, and I bought several. Actually, I bought like three. I bought them around about, I think like 480-ish. I bought the $5 calls in TAL. Of course, if y'all know TAL was the one, along with the EDU and GOTO, these Chinese for-profit tutoring services that got slammed by the Chinese government. They kind of went underwater. Not to the point where they lost, complete control of their business. It's just that they put restrictions on them. Y'all know how Communist Party scenarios, how they run their system over there, right? Unlike America, they do a lot of checks and balances. It has to meet the criteria of the government. So they hit these companies up with a whole lot of restrictions as far as their, ability to make money tutoring children, right? Because apparently there's this, it's not even a secret, but there's this talking point going around that we know that the Chinese government, right, or the Chinese, body of politics or their people, they are at negative birth rate. So being that China's in this industrial revolution state still, and they're building and grinding so much, they've had a what they call a one-child rule for anybody living in China. I mean, by the government only sanctioning you to have one child. Now this is crazy, of course. This 2021, but that's China. So what happened? They found out that the fact that was stifling their ability to grow. Again, they're populous to be able to maintain all this new infrastructure they're building. So that's a net negative to their overall GDP value, because they borrow money against people too. For every birth, that's money, like a CUSIP, right? Like a Social Security number for us. They count that as a bond for their environment. So that's money, extra money they can count for having children. So if they reducing their child population, Well, again, who's going to be there to man the ship, right? Who's going to be able to get more money off the people? So that becomes a problem for them. And so they actually revamped that rule, and then they went to what they call, the 2-child rule. Turned around, that wasn't enough, and now they at 3-child rule. They upped it to 3 children now. Now that the Chinese people can have up to 3 kids, and it's because again they're in a dire strait to a degree because they need that head count. But long story short, so what happened was the fact that these private tutoring services that were in business. Of course, I look at the stock while we're talking about it. It's the best way to look at it too. We're going to pull the stock up in real time. By doing that tutoring service, what happened was, right? They say, well, what happened was it put a lot of focus on just a minute, few of exceptional children to a degree, and it's kind of building out those kids who are more career orientated mentally, which is odd, right? They're career orientated. So by these kids being career orientated, that means that they're not more inept to want to have children, right? They're kind of foregoing the process of having a family and building a family to focus on their careers, right? Which is again a big stipend on what the populace growth perspective of their situation. So anyway, that's just the backstory to it, right? So if you heard anything, that's what's going on with that. But the stocks, man, as y'all see there, it plummeted from man, it plummeted, right? And it's just more of we're talking about from $90 all the way down to $4, and I think 60 cents was the low, $4.60. Now, the big question is, and I'm kind of off the grid a little bit here, but I'm on topic. The issue is, are they able to be solvent or insolvent, right? When we say solvent, are they able to still, rebrand their business model, work around these new restrictions that the government has put on them, and still be a profitable business? Now, keep in mind, I think this company had about $30 billion. I want to say about a $30 billion valuation before this happened. $30 billion. Again, you see the stock, it base was up here sitting at $90 a share before all this happened. It basically went from, as you see here, around $1 and change here back in 2011, right? And just grew over time and started growing. Obviously, it picked up steam here on the back end of 2015, and it took off. As you see here, clearly the stock just took off, right? Again, phenomenal growth from a IPO stage to where it went before this happened. Growing market share. As you can see, the chart actually looks good too. It's not like it had a whole lot of kind of jagged, all over the place kind of trade. This is on the monthly chart. It just showed that they had exponential growth basically. And then they got hit again behind this whole issue with not wanting to be profit value, education, I guess, in China, right? Whatever, right? Kind of like how Cuba is, right? They kind of give it away for free. I don't know. But now, long story short, these businesses have been trying to figure out if they can still remain effective, right? As a for-profit business that has stakeholders, obviously shareholders, and not necessarily go under. So as of now, they've seemed to put out some forms to say that they're still able to remain solvent. They're going to be able to revamp the business model, and then eventually they'll let the chips fall as they may, based upon if there's going to be any other drawback from the Chinese government going forward beyond that what China's already put out there. Now, last night, if you were watching the Asian market in terms of the Asian session, their stocks actually rebound a little bit because for the past 3-4 days they've just been getting hammered, right? All things like Alibaba, Baidu, Pinduoduo, Neo, even a little bit here and there. VIP, there's so many of them out there, right? All these Chinese stocks as a whole, just pick one, right? It was pretty much a dead man walking. But they did get a little bounce last night, and they rebounded a little bit, right? So we woke up today, I think, TAL was up as high as like about 680 something, right? And I had my mind, so I know it's not going to hold up there before the real market opens up. So I said, I feel it's going to pull back to like 640, 650. And it did. So at that point, I was just watching to see if it's going to have any kind of follow through, with its, price momentum that it had previous days. If you look at here, let's go to the hourly chart. We'll make sense of it all here. Let me take off these extended tabs here. If you look at the hourly chart here, you'll kind of see here exactly what's going on here, right? Clearly in that moment when it kind of, bounced off this low here, you see around about 430 here. Actually, I said 460, around about 430, 445 here. And it caught a little bid here. And like I said, I got long in it. I think on my option calls around about 480 something around there. Bought like a $3-5 call strikes for August 20 because that's the most nearest expiration date. So the fact that it dropped so fast so much, the option market hadn't had a chance to really rebalance the inflow to build out an order flow that could be reputable to all this volume. Now everybody's scrambling to get in, right? Either to short it or to go long, and it's having the option market is kind of in flux trying to price all this stuff in. So they had an expiration date that didn't close out to next month, the 20th. And keep in mind, those contracts, when I bought them at that time, they were, gosh, I want to say I paid like 70, 60 or 70 cents for them. I have to go back and check a contract, right? And so what happened was that, everybody was still waiting to figure out, was the Chinese government going to give them any leeway? Was they going to come back and, the company going to come back and say anything about it to kind of, help the investors feel like, is this, dead man walking, or are we done or what? And so little bit by little bit, information started trickling out that they might be all right, this, that, the third, whatever. But anyway, the stock bounced like most stocks do in that moment, right? After having such an egregious sell-off like that. I mean, look at this thing. This thing fell from what they call, I don't know what you want to call it, right? It already had gap down earlier from other previous levels, going back, early in I should say maybe April or what, around about April, somewhere April time frame. And from there, of course, you see here, I mean, pulling it back here. After that, it was just like, man, what do we do from here, right? What do you do after that, right? Because the stock was, like I say, doing so well before all this happened, right? But that's the nature of business, right? That's the nature of business when you invest in some of these assets that may be a little bit, I don't know. I'm not going to call them. They're only issues that the government, in terms of where they're being housed, that terms of Asian market being listed in American markets, they're still subjected to the Chinese government, not the SEC, in terms of them saying, okay, we don't want you just because that and the third. But that can become a problem in some cases with some of these Chinese stocks. Some of them, I'll say some, and so they just fell victim to that, right? But you look at it now, you say to yourself, is it worth the opportunity here? Is it worth the opportunity or the attractive value to take a starter position and let them prove that they're going to be remaining instrument that could be still invested in, all right? Me personally, like I said, I took it under that guise that I think it may get a bounce and nothing else until everything really sorted itself out. And so what happened today, I ended up selling two of the calls I had because they was up, pretty nicely, right? You're talking about well over like 160 some odd percent. I made on those the two calls that I did sell. I kept one, and so after it kind of failed around 630, 640, I said, you know what? Okay, they're gonna let it pull back because they made a nice little bounce off 430, ran all the way up. It's close to $7. That's a nice move, right? You're talking well over, dang near what, close to around what, in terms of this natural perspective, not this option, but close to that, that of near 80 some odd percent, somewhere around there, give or take. So that's a nice little bounce, right? Nice little bounce there in that perspective. So, the stock is just kind of cooling off a little bit before it probably hit another level of support. As you see on terms of the integration band, it's trending right at that trend line. It may bounce again. I like it for the value that the risk versus reward is very attractive based upon, how the chart is setting up. Again, we know the universal sine waves that we're trained to trade, right? We kind of stretch this out a little bit here on a shorter time frame. You can see here on the 5 minute here. We're trained to trade these peak to troughs, right? These peak to trough moments, right? Well, that's 5. Yeah, that's 5 minutes. All right, what's going on? What's going on here? All right, so we train to trade that, and so basically what you got here, that bounce here, coming out of hold up, let me squeeze it down too much. All right, coming down at this low 4 area here, where it's kind of trending at this area here, kind of build up some consolidation here, and then it broke out, right? And now you're just having a moment where it's kind of pulling back a little bit. It's still bull flagging off the lows, granted, right? It's still bull flagging here off the lows. Clearly, you can see that here, right? And now it's just trying to build new support. So the new support Of course, you got a gap here that gapped up, but it's not necessarily even notable in this terms of filling the gap because look where you fell from, right? Now, it still can come back and under that and fill that gap and come down and hit 580 because that is still an air pocket in the market. No matter what, even when the stock fell this much, there are air pockets in the market, that still need to get filled sometimes. So who knows? Maybe it will, maybe it won't. But as of now, it's trending here at 590. The bottom of the linear regression band is sitting at 579, 580. If it breaks that, then possibly you can kind of feel that little air pocket there. But after that, if it holds a little support there, that may be a great startup position for some people. Again, know your risk factor, of course. Don't invest in nothing that you'll have no knowledge on. Do your research, right? But, for myself, I am planning for a bounce to see if it can get above the 200-day moving average. Clear enough, not just on the 5-minute here, but on the bigger time frame here, hourly, whatever. I think on the hourly it sits at, let's see, where was it again? I think it's sitting up here near 10 okay, 20. It's at 20 up there, right? Obviously, it makes sense because that's what the last level of consolidation was on that roller 200-day moving average perspective as it kind of trended, sideways to down. But if you had the 50-day moving up, the 50 days sitting somewhere around here, I think it's like between $9 and $14, right? I don't have it up here, but that's where I'm kind of looking for a target price value. If it can fill 20, so be it. All right, I'm all for it. But the risk profile here is very slim. Why do I say that? Because you already know where the bottom's at. The bottom basically at the low, right? It's at the low at $4.45, right? Air pocket sits at 540, 550-ish. Okay, 40 cents off that from where it's trending at right now, 30 cents, whatever. And the calls are still somewhat not that bad in terms of price, right? Again, I'm just laying out a perspective of how I've been trading, right? I benefited from it, and made a nice little bag off of it, thus far. Just the two options I did sell. Like I said, I'm holding one because I like the fact that, again, it has earnings coming up on the 5th of August. And granted, even though they just got hit with all this news and information concerning that with the Chinese government, they were already doing good things in terms of their business model before this happened. So the earnings numbers should still come in and do very well, right? It should possibly beat, right? Barely, right? Can you see? Barely, right? And so if that's the case, that may give them hope in terms of the investors that, okay, yeah, we may suffer a loss in terms of the share price structure coming down, basically just reset their PE ratio, which is somewhat a good thing, being the fact that the stock was already up again so high. So they basically just got what they call like a do-over, right? As weird as that sounds. And they still have to perform now. I'm not saying they don't have to perform. They still have to perform. But, under the conditions of if they are able to, save and preserve their business model, I think this could be a good little comeback story. Now, will it make it back to $90 by the end of the year? I'm not going to go on the record and say all that. But I am, like most traders out there who are trained to spot these kind of things, I am trading it for the ideal to see if he can at least clear $10, and from there, 15, and then from there, possibly 20, right? That's a whole lot of hoping and wishing and whatever, but we'll see, right? As more news comes out, we'll be there to watch it. So I'm just, unfurling the ideal of an investor's mindset, right? Or a trader's mindset. When you look at things that have failed like that, and you say at some point the stock has to bounce just on the technical side of nothing else, right? Matter of fact, look at the linear regression band here on the daily chart. Every time it came down inside this band and bounced near that bottom of that linear regression band, it either bounced, pierced through it a little bit, and got back inside of it, tested the top, trended inside of it, bounced close to it again, there, didn't even touch it. Bounced, came back to the middle line, came down to the bottom here, didn't touch it again, bounced around that area, and kind of went sideways. So it's trying to hold, much as it can, and it just happened again. Look right here, see? Came down, bounced off that area there, and here we go, somewhat kind of flatlining out a little bit here around 550-ish, 580, $6 range, and trying to build a new support. So who knows? Going into earnings, it may just, be a nice little play for some people to look at, but that's just an opinion, not investment advice. Do your research and due diligence before you buy any stock, and never invest money that you're not willing to lose. That's how this stuff works, right? So get excited, right? But that's TAL, right? So I just want to kind of premise that. But that's what you look for when you're looking for opportunity in the market. That's literally what we do, right? And we talking about a stock that's at $5, right? And matter of fact, let me run over here to bar chart really quick and because I haven't seen the updated price since I sold out this morning, right? Just seeing what the options is, for that same $5 call. Um, I'm curious to see exactly what is trending at this point here, because I think they're probably still pretty decent. And probably, yeah. So as of now, they're still sitting at about $1.60, right? They're sitting at about $1.60 a contract, right? Give or take, right? As you see, it lost some of its value. They 37 cents value worth, because it pulled back off that 630, 650 area when it opened up at, even though that 680 doing pre-market. That's fine and well, right? Because that happens, right? Stocks do pull back, right? They pull back after making such a good run, because again, it bounced from 440-ish and ran all the way to like 680. Right? Again, that's a nice little bag for somebody that was really, able to catch that bounce and make them some money. So again, like I said, I ended up paying, I think like 60, 70 cents a contract when I bought them. And I only bought a few. I should have bought like at least 5 or 6 of them. I only bought 3, whatever. It happened. Right? But that's the name of the game. Right. So yeah, so $1.60 going into August 20th, as you see there, expiration date. Again, you see a lot of people still buying a little bit out further from that. All the weight is starting to kind of coagulate around $7.50 strike calls, $10 strike calls. And let's see if there's any kind of buyer trying to do a gamma thing on here. Yeah, I knew it was gonna be somebody. You got somebody out here trying to do a gamma play, which ain't gonna happen in this one. I doubt it ever make it to 130. But you got somebody out there buying. Somebody bought them today, actually, 500 of these 135 strike calls. But again, in this case, neither here nor there. Not going to happen, right? Not going to happen on this one. Wall Street bets ain't that crazy. But yeah, so that's just how I'm looking at it. That's how a lot of times, when you're looking for opportunity in the markets, you're assessing these different, some of the ingredients to let you know whether or not it's a good opportunity to build a nice little, little meal from it. Give or take. Again, the put to call ratio is almost even, or even on the open interest to a degree, right? Of course, it's still a little bit put heavy. It makes sense because it fell so much, right? But some of these people have covered their position since yesterday, as I've seen this kind of decreased a little bit in terms of the put open interest and also how the put volume was yesterday. So that lets me know some people are, like, okay, this thing is it going to bounce? If it's going to bounce, let me, go ahead and get up out of here with what I already got. In terms of profit value and, wait for something else. Right? Outside of that, the next call expiration is sitting around, September the 17th. Now look at the price of those calls. Only 30 cents differential. And people starting to buy them. Look at that. 253 people bought them so far today. 768 people bought the 250 strike calls. That meaning if they take that thing into expiration date and they choose to exercise those calls, if it don't, obviously have any other issues, that means they get an entry price at $2.50, even though it could be up near 10, 15, 20, speculative, right? They'll get a brand new position at a company that had that kind of level of opportunity set in place before all this happened, right? But that's how you strategize around utilizing what we figured to be what they call a catch-up trade, meaning you might have not have heard about this company, never seen it, and you say, man, the stock was already at $90. Man, I would have loved to have bought it at 5 or 2. Of course, anybody would, right? That's a bag, right? It's a big bag. Well, this is how the option markets equip you with that opportunity to do that, because by you being able to buy options at a much more cheaper price, which you can never do by buying the shares outright at a stationary price, it does give you opportunity to say, I'm going to build upon this, new building block at a lower price, and we'll see what the future, unfolds from there, right? So 505 open interest contracts that, came from yesterday. So that means somebody is buying that 250 strike price. Somebody's doing it, right? And, for what it's worth, they may be, able to capitalize off of it if things unwind from the fundamental side of the house, rightfully so for TAL, right? This educational Chinese tutoring company, right? As you see there, even for that put the call ratio, look at the call buying starting to pick up for September ahead of the puts. The same thing for the open interest in that same likeness, that over the put open interest. Going into the month of September, somebody's starting to feel a little favorable towards this. And look at the heavy open interest that is sitting at around that $12.50 strike price, right? Those contracts are only 35 cents right now. 35 cents. Basically $35. for potential that this stock can just bounce. If it just go up to like, I don't know what, $7, $8, $9, you already gonna be making some money, right? Because you got that much time allotted before this contract, comes, up for expiration. All right. So it just, I'm just sharing a little bit of, how this stuff works in a lot of ways. For some of you guys, already ain't nothing, ain't nothing new to y'all. But dang, I wasn't even sharing the screen over there. My bad. I'm sitting there just breaking down. Y'all
Man,
know me.
I just hopped in. What's up, bro? This is Tell. I'm like, man, what is he talking about?
Yeah, I forgot I'm on StreamYard and not Zoom. If I was on Zoom, it switches with you, right? On StreamYard, you got to manually change it out. If you don't make it set where you can just change from screen to screen. So I don't know why I just didn't do that. I should have just did that. So forgive me, guys. My bad. Let
I
me
was
get
looking
over.
for that put to call. Like, where's that at?
Yeah,
I'm
let
just
me over here going in. Hey, y'all know your brother. I get to going, I get going.
I looked
Yeah.
up the stock. I ended up just looking up the stock. Like, let me just see if I can get on here and see what he's talking about.
Yeah, and so I'm over here on bar chart now, guys. Matter of fact, let me post a link. I like sharing stuff. Y'all know we do work over here, so I'm gonna share the link with the people in the back chat over here. Yeah, don't hesitate to interrupt me too when I'm doing that, man, because I'll get going and then it'll slip me. Right, is exactly what happened. Right, it'll slip me. All right, so there's the link, guys, for that particular bar chart readout or order flow for that August 20th contract for perspective for TAL. Right, so that's again that perspective of hold on, let me get over here. Where we at bar chart? Here we go. Of what people are looking at now as potential opportunity, again coming back from the way the stock has dropped. Yeah, it does look a little, again, potentially attractive, right? In terms of getting a little bounce and rebounding a little bit. We'll see, right? But the prices are not exorbitantly rich, and people are starting to kind of increase their value to want to be a part of it or be in it. We'll see, but just know your risk factor before you buy anything. And never just take somebody's advice as face value. Do your own research first. Do your own research, right? So that way you be accountable for any decision you make monetarily wise. And if not, you're going to blow it on something anyway. I'm always going to say that, right? If you ain't invested in the market, you're going to blow that money on something else anyway that you're going to get nothing from, right? At least you have the opportunity to build in the investment side of the house and make money, then you would have just blown it on something that's, one and done situation. All right, so there you go. So that's TAL. Just using that as a backdrop conversation, just dealing with these markets in terms of what all this new volatility is starting to present itself to us, even on the Asian side of the house, right? They're getting a rough. Matter of fact, let me look at that and see what those 2022s look like again. I looked at it once. They still they weren't that bad. They're not. See, they still pretty good. So even into 2022. That same $5 call, right, is only $2.40 a contract. Right, 26 people actually bought it today. Right there, see the open interest at 1,800 contracts that already been bought, and people sitting in them at this point. They're trading for a rainy day. Now, this is one of the why I say, this is how slick, the market is in terms. Well, it's not slick. It's just people are smart. They'll say to themselves, okay, again, if nothing else, it has a technical bounce ahead of itself. Right? At least. However, if the company continues to put out the kind of press releases to say, we're going to be all right, we're going to find other ways, we're going to be all right, we're just going to shift things around, that presents a more bullish thesis for the investors to say, okay, I'm going to hold tight. I think the latest downgrades that have came out on the stock from like the JP Morgans, the Deutsche Banks, all the people like that, I think it's a consensus around about $7-8, somewhere around there, $7, $8, $9, $10. So that means it's still, and effectively around about 30% off, 30% to 40% off that mark, right? Close to that, up near 100% if you're going up near towards $10 or whatever. So that's still attractive for option trader, just a regular investor period, because that's again, these are golden opportunities where you say, man, it was here, it's way down here. If they could just kind of get back 1/3 of their value, that's a great little investment. Right, investment trade. Right, let me say that investment that turned into a trade, because at that point you may say, I'm gonna take my profit. It's been a nice little run. Stock got back above 10, 12, 13, 14, $15. I got in 4 or 5, whatever. that's a good little bag. You talking about up over what 200% somewhere around there? I'll take that any day, right? And that can happen in a matter of months, whatever, right? Weeks, whatever. The market is crazy. All right, but that's essentially what we're looking at when we're trying to ID this stuff. So yeah, $240 for contract for the $5 strike, not bad. Of course, if a person got it to spare, just know your risk profile again. That gives you all the way until to next year, right? That gives you into next year. Let that marinate for a moment. So this is what they call that glorified savings account. You got your money in the money market account collecting dust because the interest rates are killing your money market account. And it's doing nothing but just dead presidents, literally, right? You say to yourself, okay, well, shucks, I might well put it in some fertile soil, right? Right? I might, let me reorganize me some of this money here and put it to work effectively, right? I'm gonna monitor it, right? Of course, but there you go. $240 can be sitting in a $5, strike call all the way into next year. That may provide some opportunity. Again, this is just my opinion, right? It's not investment advice. It's my opinion. But this is what we're looking for, right? When we look at these kind of things, right? So, so that's just something to think about. Something to think about. All right. So that's it. So we got some new family that came in the building. What's going on? Oba Shav is in the house, right? Brother Tepperide in the building as well. What's going on, Obas? I know y'all was getting there early on another channel, building a little bit. Again, in terms of the investment stuff, I'm pretty sure you guys are excited about, definitely watching Bitcoin bounce a little bit. I know some of us been discussing that, in other platforms, and loving the idea that it has gotten back above some key areas of support, or some key areas of resistance, and now it's looking for that next potential leg, either up or back down to that aspect of support in terms of low 30s. But as of now, loving it around about anywhere above 35,000. I think it's in a good place here to continue its upward movement. Unless something else changes. And why did I say that? Because, again, we're talking about hedging the proverbial pullback in the equity market in the event that we do start the tapering of the bond market. Well, guess what's going to happen? A lot of people are going to do what they call a flight to safety, and they may run to more of these crypto-based stocks, right? So it's speculative, but, again, do your research and follow the breadcrumbs, and it may help you out, all right? So get excited for that. So, while we are talking, are there any stocks you guys want to talk about? What's going on over Rich B in the building? I family T Arca in the house. See you there, family. Brother Rams in the house. See you guys. Peace, power, and profit, you guys, right? Happy to have y'all in the house, right? Shout out to everybody coming through today on this Thursday. I know y'all busy, so I know y'all going to be popping in and out, right? I get it. I'm just happy to have you here. Always grateful for that because I do believe in the power of, again, community when it comes to this stuff, because you need a tribe, right? You need a tribe in this environment, because all the eyes and ears on deck really helps you make better decisions with your investment thesis.
Right? Yeah, man. I'm glad you're doing this, because I need a tribe. I need some people that's into this, because my previous groups, we talk about history, we talk about African languages and stuff like that, but when it comes to this, it's a different ball game. You see what I'm saying? So I need to
totally agree.
I need to surround myself around people that, when I say quantitative easing, they know what I'm talking about.
Yeah, there you go. There you go. QE, right? QE style.
Right. So, yeah, I appreciate this.
No worries. Just another layer of what we already need to be, partaking in anyway. Again, we can, of course, I come from that environment too. That's the fam over there in the Dagger Squad, by with the Army Rod and everybody else. It's still, it has its place. But at some point, we also got to be fine with it, make a little money too, right? We got to get a little bag. Right. To go along with that other knowledge, right? So you got to learn how to diversify, right? Let me repeat. You got to learn how to diversify. Even your attention, right, needs to learn how to be well diversified, because of too much of one thing ain't necessarily a good thing if you don't have moments to kind of back away from it and look at, everything else in totality, so you can make some really good informative decisions on what's the best use of your time, right? So in our case, of course, the best use of our time in this lane is that, okay, what's the prize at the end of this? Well, we get a chance to make some money, right? And I don't know about y'all, but look here.
Shoot, we like that money, man.
Right, roll them hands, right? I'm just saying, ain't nobody telling you what you can and can't do. Nobody tell you what time and what not. You are running your own independent online business as an investor trader, And again, I tell people every day, ain't no better business model out there. And I've done a lot of different business stuff in my life, corporate side all the way down to whatever. But when we talk about turnkey, with the stuff that we already know innately in terms of our natural business dealings in life, you're learning how to something as simple as balance a checkbook. Invested in trading is set in that same mentality. You know product, you know services, again, margin to a degree, because again, if you bought a product at this price, let's say a month ago, and now it's this much more expensive, well, what happened there, right? Either there was some inflation or they increased the price for a margin expansion, right? The company must be doing something well if they're able to increase the price and people still pay for it, right? So it's business at a very rudimentary level before you get into the minutia. But none of this stuff is outside of our pay grade. It's not outside of our modus operandi of thinking. We're just confused by the idea of, the importance of it, in essence, to everything else that we do submit our time to, right? So, of course, this controls my life in a lot of ways, right? And it's a good thing, because if I'm really sincere about trying to build generational wealth, share it with my peers, and which you guys are, then, we do have to find ways to, commit to the sacrifice of learning exactly something that can really benefit our people, right? Because there's a void when it comes to the financial disposition of our situation. What else did you have, right? If you really want to live life on your terms, you have to find a way that you can earn, right? As they say, earn your leisure, right? Our brothers over there, earn your leisure, right? Well, how true is that? You have to earn your leisure, right? You in a capitalist society, right? The name of the day is what? Get money, or you gonna what? You gonna suffer, right? Ain't no do-overs, ain't no sympathy plays. That's not how this stuff work over here. You have to be an able person when you can plan, income, unless you're gonna live off the grid, right? In order to survive, right? So again, we were talking about being able to walk into a business model that doesn't require, again, the basic accoutrements, right? A laptop, cell phone, computer, some knowledge, capital, right? And a broadband connection, Wi-Fi, whatever. You do this anywhere around the world. Right? Our sister Deshonda is in Africa right now, visiting, in Ghana, right? She's doing the whole trailer, she's doing the whole thing. And guess what? That sister still got the ability to go into her account and make us some money. Her Webull, Robinhood, whatever, TD Metric, she's still over there making money right now in Ghana. Right?
It's crazy because you taught me I could do this with my limited small income. I can be able to do the same thing to create like a rainy day fund for myself. So I can be, when I'm broke or whatever, I ain't getting no hours, I still don't have to stress because I got something put up I can tap into whenever necessary. That's why I always appreciate you doing this right here, man. You
That
hit me
part.
to this square business.
That part, Brother Shavis. And exactly having the ability where you can move on your time and still be able to, again, y'all power brokers in your own right? You're making moves throughout the day, here, there, everywhere. In the interim of doing that, you still have access. See what I'm saying? Access. You can't do that in Mr. Charlie, right? On the clock, right? You can't just roll in, clock in, and say, I'm going to clock back out and go home. They're going to look at you like, okay, you must be on something today, huh? You're just going to show up and then clock. All right? Good thing. Hope you keep your job, but you know what I'm saying? You don't have that level of freedom. Here, again, you have freedom, and you don't have to do it every day. This is not what we're preaching over here anyway. We're more of the mindset that this is a marathon, not a sprint, because we're already behind the 8 ball in this. We've been late to the party. So we're playing catch up for a lot of us, right? And that's fine, right? Again, that's just how the cards were dealt, whatever. Need not make any excuse for the reality of what we're dealing with. However, at some point, the interest has to kick in and make sense to you that you need other avenues or opportunistic, scenarios set in place where you can benefit from without requiring a whole lot from you or of you. Does that make sense? That's the part that makes this, in my opinion, it don't have to be stocks like that. It could be crypto. It could be Forex. Again, any entrepreneur endeavor, essentially, right? That's what we're trying to get excited about, where we can submit more of our time to those things than the things that are depreciating values, right? Things that take away from you and there's not necessarily a net positive return from it. The older you get, you start realizing, I don't have time. That's just how this stuff works. The older you get, y'all will realize. Some of you guys out there still living that really, really good young life. The older you're going to get, you're going to start realizing you don't have much time to sit around and wait.
Hey, that's why I'm right here. That's why I just popped up on the stream, because, you know, I'm a brand new newbie to all this right now. Like, I've been listening to you for like a year or two for now, but it's like I have to get myself, you know, really reacquainted with all this, especially the terminology and stuff, because it's like I need to know how to make another income instead of, you know, just doing the 9-to-5 thing.
Makes sense. And see, that's the greatest thing about having, like I say, an ecosystem, a tribe, however, where you can come in a place where you can feel, you know, just as much comfortable as a person who's been doing it for 20, 30, 40, 60 years, right? Because over here, it doesn't necessarily matter. It's not a rank and file system. You know what I'm saying? It's different over here because all of us are trying to do one thing. We have one objective goal is to what? Get the bag, right? We're trying to take back from the market that's already taken from you through other forms of what? Ancillary taxation. Taxing you, overtaxing you, inflation kicking out behind right now. A gallon of milk costs how much? Where you at now? An extra what? 70, 80 cents to $1 in some places for a gallon of milk. If you if you're drinking milk, whatever. Gas is going higher. Again, bacon is expensive now. The used cars going up. Used car prices are up 30%, guys, since January the 1st of this year. 30% for a used car.
Yeah, man. I told you last night I benefited from that.
Yeah, you spoke on that a little bit too. Yes, yeah. I mean, we're talking about that's inflation. That's the inflation. A lot of people out there that have no clue about this stuff, they're feeling it on the back end and they can't make sense of it all because they don't have intelligent people around them to explain this to them. This is what's happening. You see how that works? So they're upset. They don't know how to make sense of it all. They're already thinking the government, you know, sticking it to them anyway, which they are in a lot of ways. But even worse, when you have no clue of what to do and how to make moves around it. You see what I'm saying? So, again, for what it's worth, these conversations are necessary. They are necessary. And you have to be around people who are actively willing to share, willing to build, willing to grow with you, because that's the only way you're going to make sense of it all, right? And so I think it's just my opinion. Man, this is like non-negotiable. You have to get with people who are out there moving in this financial literacy lane. You cannot negate this outside your circles. If you are, man, good luck. Let's keep it 100. That's good luck. If you were moving around and nothing in your circle that had to deal with financial literacy, or it's too taboo and people too, whatever, good luck, right? Because COVID messed up a lot of people, right? Physically, mentally, and financially, right? But the one thing we can say, if you are able to still get your bag, that definitely helps with some of them problems, right? It definitely alleviates some of those mental problems, if nothing else, right? So again, it's worthy of opportunity for the fact that you will be put in a situation where you can benefit if you just put in the work, right? So just want to put that out. So brother Quavo, you say you want to look at Tesla real quick. So yeah, I hit Tesla up earlier today. Man, this was a great play. I've been playing it the same way a lot of people had been watching it too, right? It had been in this proverbial, downtrend, not necessarily downtrend, but this consolidation point. So let's lessen it down to a smaller time frame so you can see what I'm talking about here. All right, let me take this off here. Let's go to let me change the time frame here so we can see exactly what I'm talking about. So yeah, this was a nice little play. Ended up making, I got up as high like $700 on this trade. This was an intraday trade I took too, so it wasn't necessarily something that I had coming into today. No more than the fact that it was, I had been trading off and on, day trading it, but coming into today, what I'm saying, it just, ended up being a really good, profit zone scenario to take advantage of. So let me do it this way here. All right. This is one line that I have up here. All right. So let me see. Is it set at that bar? No, that's the other one. So let me bring this down here because it was roughly around 6. No, it was actually lower than that. All right. I know I just need to put a new line up here. But either way, I'm just going to give you some perspective here a little bit. Tesla, obviously, being what it is, just had earnings recently. They, had the biggest profit haul ever in their career, and the stock pulled back. Why? Because again, The same way Facebook pulled back. The same way Apple beat and they pulled back. The same way Microsoft just had earnings, they beat their earnings and then they pulled back. The same way Google had earnings, they spiked, pulled back, and then tried to go up later. But the tech sector as a whole is still under a lot of inflationary practices and inflationary issues, I should say, problems. Why? Because the cost of goods, of commodities that make up a lot of their infrastructure is more expensive because of inflation. See how that works? Not rocket science. On top of that, there's this major chip shortage, right? Y'all probably been hearing about it in the past, and there's a big chip shortage going on right now. Taiwan is being one of the biggest chip producers on the planet. Literally, they are the biggest chip producer on the planet. Their model over there is disturbed because of what? COVID, supply constraints because of the what? Inflationary issues that are causing their goods and services more expensive. And they had a low GDP, a low value over there anyway because their cost of living is much cheaper. So, of course, to have those materials hauled into their environment, it's costing them more, right? Even though they got companies over there that are paying for all the manufacturing, it still costs them a lot of money. And they can't afford it at the levels of their cost of living to be able to, do that, produce these good, these chips or whatever, and then ship them out around the world where people that need them, right? Because y'all know how this stuff works. Apple don't want to pay a fair wage for people to go out there and do the right work, to produce your iPhone, right? It's this blood diamonds all over again. Let's not play around here. It's blood diamonds 1-on-1 all over again. But now instead of blood diamonds, it's blood chips. It's blood, cobalt, manganese, magnesium. It's those kind of elements that they're extracting from the earth, and they're paying child labor or sweatshops, right? That stuff do exist. That's not conspiratorial. It is in place, right? So that's how this stuff works. So these bigger mega conglomerate tech companies who benefit, off that. But guess what? Right? Now they're second, win a little bit because why they just been reaping the benefits of what? Just having a phenomenal run. Matter of fact, let's go to XLK. Then we'll come back to Tesla here. XLK is the the ETF for all things technology, right? The SPDR ETF, that is. And I mean, let's look at this thing on the daily chart. This show you the monstrous move it has had since COVID, right? So everything that was popping during COVID, while everybody was sitting at home, well, what was they on? Some kind of device, right? Some kind of technological, innovation. They were sitting on it and using it. So, of course, anything that has to deal with even biotech, biology, technology, at infrastructure perspective, they were starting to pick up because there was a need for the vaccine, all that. But let's put this in perspective here. Now, this is when the COVID lows happen, right? This is during, again, right? This is the COVID, right? COVID scenario, right? So let's do this here. That rounded bottom right there, let's say that was a COVID situation. That was the COVID situation, right? Since then, right, we're talking about $68 on the XLK. Since then, Facebook, Apple, Netflix, Google, Amazon, throw in your favorite tech stock, Microsoft, whatever, Xilinx, whatever, all those type of companies like the AMD, NVIDIA. Since then, that ETF, this is an ETF, mind you, an index, has gone up here roughly around about near what? Close to that of what? Near what? 200%? And we talk about every bit around about what? A year and maybe a year and 3 months, somewhere around there, give or take, year and 4 months of that. Some investment vehicles take years and years to kind of, reach 30, 40, 50, 60%. And that's still good because that still beats out a basic money market account any day of the week. But when there's egregious moments that are happening in the world, right, because, opportunity is born out of chaos, right? The whole chaos theory, y'all heard of that before. This is just a money opportunity for people who got what? Got wealth. This is a dip buying opportunity for them. This is how the wealthier get richer or wealthier, right? The rich get richer because they utilize financial vehicles and assets like this to grow their wealth when there's a discount opportunity afforded to them. Us, on the other hand, start panicking and don't know what to do. We say, oh, I don't want to be a part of that. I just want to hold and save. That's the worst thing you can do when there's an opportunity where you can seize it and you sitting on cash and you ain't putting that money to work. The worst thing you can do is save it. Why? Because if you don't grow that income, if you run into any issue, emergency issues, you finna liquidate those savings. Am I lying or am I telling the truth?
Straight facts.
So,
how so?
Right? Because if your money is not working for you, That means that static money supply that you have is static. Keep in mind, it's very static. It's not dynamic. That means it's static. It could be discharged easing, wiped out easily, because again, if things hit you and you don't have a steady money supply or an increase or incoming aspect of other money coming in to pad that what you have to build on that means you actually on borrowed time. Or even more so, you on borrowed dimes. Because every day you have to pinch off that. You have to pinch off that, right? If you can't supply that supply, you have to keep pinching off of it. If you home, let's say you was able to get unemployment, whatever the case, and your bills are still exceeding that, right? It depends on your lifestyle. But yet still what you already had in savings, you have to kind of feed off that a little bit, right? To a degree, if your lifestyle has now, drastically reduced because of the situation. And so what you do have, because y'all heard the saying, you have to have at least 6 months worth of income put away for a rainy day. Well, guess what? Notice they always tell the citizens that, but they never tell banks and corporations that.
Yeah.
Why? Because
that's a good point, bro.
Why don't the banks and the corporations have to worry about that? What they tell the citizens to worry about? Anybody?
Because the Federal Reserve backing them.
Who's backing them?
The Federal Reserve.
Or the government. Why?
Yeah.
Because they're going to protect their stakeholders above all first. Notice that? Those who own businesses or own assets are going to be the first in line always to get either bailed out or taken care of. Why is that? It's the citizens that buy the products and the services. Why not the citizens first? And then the people who got billions of dollars that just blowing it on executive bonuses and mega luncheons and $1,000 dinner luncheons and just blowing money, right? Well, a lot of us forgot that this is the land of milk and honey, opportunity, right? Pursuit of happiness? No, pursuit of the bag, right? Don't get it twisted. Ain't no happiness in America unless you create it for yourself, right? Ain't nobody gonna walk around and give you handing out badges of happiness. No, that don't work that well in America. This is a dog eat dog society, and it's based on what you can acquire, build, keep, preserve, and pass on. If you cannot do those things effectively, look, I hate to say it, but the history book's gonna look at you like, who was that? Did they do anything groundbreaking? Did they leave their name behind on any kind of deeds, bonds, or anything like that? Okay, they were just somebody loving child. Okay, that's nice. But that's all that. History would not reward that value.
Yeah, I'm following.
That's reality, right? You got to get some paper that controls some land, get some paper controlling the business infrastructure, get some paper controlling the accused number in terms of a stock investment, bond, or an equity, right? Appreciating assets, because that's the only thing that America respects. Not just America, but any central bank depository around this world, all of them move under that same mandate. Y'all notice that? And y'all notice that the only countries out there that do not have a central bank in it, they always at war with America and all the other people that got central banks. Why is that? Because they won't in, right? The nature of the central bank is parasitic. Call it what it is. They won't in. They want to be able to control the resources of that country. So it's no secret, it's no secret at all. Asset ownership is the only game in town. I ain't hate to even position it like that, but that's just the naked truth, right? I'm not finna sit here act like it ain't. If you know anything about monetary policy, the central banking system, not just America, but the global central banking system. Y'all know the hub of the central banking system is basically in Europe, right? Europe is the financial hub, America is the military hub, and the Vatican is the religious hub. Let's not get it twisted, right? That's that triangle. I'll just leave it at that, right? Y'all draw your own summation what I'm talking about there. So they got things locked and cocked, right? You have to figure out where do you fit in the grand scheme of that? Meaning, what can you use, or what can you extract from that without having people telling you, when you can, how you can, all that kind of stuff. Meaning, you're being your own boss in this moment. You're your own organizer, generator, distributor, dispenser, whatever, of this existence in terms of being able to capture income and live life on your terms. Void of rules, regulations, all that stuff is there, prerequisite. We get that. But it should not bar you from utilizing these skill sets to help you get money. Because again, if the world's riches are set up in that central bank and hub situation, well, what are their main assets that they control? What do the central banks control above all things besides the ability to print money, right? All this fake money, fiat currency. They have the ability to use that now, funny money, to go out there and buy up real hard assets, gold, bullions, commodity lumber, feeder cattle, hogs, chicken, corn, sugar, cocoa. I mean, they buying up real product, real bartering commodities with monopoly money. And then the society says, okay, this is great. Right? Quantitative easing, right? So this is the connection I'm trying to draw or put in practice, so a lot of us do not be, misled ever again. At some point, you're going to have to do something you never did to obtain something you never had. Meaning you have to go really to take a chance, right? If you take a chance on a job, well, essentially, you're kind of doing the same thing, right? You're hoping to get hired. Now, you get a little education. You think this should be your gateway into a job. Well, that's a whole lot of malarkey now, because that's not even how this stuff works anymore. Education ain't no more worth than the piece of paper is wrote on these days. People find that out the hard way now. People are like, well, what else you do? What else do I do? What else do I have? Well, there's a lot of things you could do. How many people started businesses because of COVID? A lot of people. How many people benefit off the businesses? A lot of people. And they was able to tap into SBA loans and the PP loans and all that stuff to get their businesses off the ground. Through a moments of ashes, businesses arose out of nowhere. People start trusting themselves more so than saying, I'm just dying to go back to work. For some of y'all, maybe it's a good thing, could try to get away from the wife and kids. I've heard that before, right?
Yeah, I was the ones that was dying to go back to work.
Right? But however, you look at it from this perspective, isn't it better to be in a position where you can be your own boss and move on your own time? You can be an investor and go off throughout the day like you're doing a regular job and handle your business and still be in a position where you still feel like you're doing that same regimen going to work. I got a lot of trading buddies and partners that actually LLC their trading business, and they actually got them an office and they working out of office just to go there to trade. That's the only business being conducted in there. They're in there, they're trading. When they done, they leave when they want, cut the lights out when they want. They could be done at 11 o'clock, 12 o'clock, 1 o'clock. They could be done in the first 30 minutes of the market. The rest of the day, they're on the golf course. They went fishing. Like y'all with me, I get on the boat quicker. I go fishing quick, right? They're living their life based is my point, right? And again, everything else is still handling business, right? Your spouse might be still handling business, working. The kids might be off to school, whatever the case. It's no different. It's about perspective, though, in terms of how you value such an opportunity like that. Because you have to really sacrifice yourself to be in that position. But that's ownership. That's what entrepreneurs do.
Yeah, it reminded me of that documentary you showed on here a while back. I forgot the name of it though.
That the one on the monetary system, or the Japanification one, or probably the monetary system. I'm pretty sure it was that one. The central banking system. Yep. It's that same kind of reality. Because again, those who have paper, right? Those who got paper, well, that's what they do. Right? They increase their net flow in real time, man, and then they done. And then from a business perspective, they don't got other people in their circle. That money is still working for them while they out doing other stuff. Y'all know the saying, your money need to be working for you even when you're sleeping. Yeah. Well, that's what's happening in the markets. It's still working.
All the man said he just needed his phone and his laptop. He can be in any room he want to be in.
And get paid.
Yeah.
Think about that for a moment. Seriously, take ownership of that idea. Take true ownership of the idea. Because how many people will honestly say they wouldn't want to have a scenario or setup like that in real life? Honestly. Like, who convinced themselves that, man, I don't need that. I just got to be somewhere, get my elbows, ashy, my knees dusty, my back got to get strained. That's the only way I feel like a man or a woman. Like, who says that in 2021?
Right.
When you got internet sensations, people just sitting around that was bored became internet sensations because they put on a goofy video online, and they got millions of hits, went viral, and now they finna get it big bag from what? Advertisement. Like, what? Right? If this is the society we're in today, this is what we've been reduced to. So yeah, a lot of the old school people ain't nobody accept that. No, that's not working, man. That's a whole lot of that's playing around getting paid.
Yeah, and that's pretty much all the advice they can give you. You know what I mean? Work hard, not smart.
Because they came from that old school way of living life, where they had to build out a lot of the infrastructure that we're not getting able to partake in and benefit from. Now it's up to us to layer it and take it to this next level of innovation, technology, et cetera, right? That's how this stuff works. It's been like that way since time immemorial. That's how the world works. Innovation, technology has its place in terms of the evolutionary change. It's supposed to be made easier for your offspring than it was for us. That's how that works. And that ain't a bad thing. It's just that you have to learn how to adjust your situation to accommodate that, so you don't miss a beat. Your children don't miss a beat or a meal, right? In the future, by the seeds that you're going to plant today. And again, convince me how you're going to pass on a job. Go. How you going to pass on a job? How is a child going to liquidate grandmother's favorite Bible? How is a child going to liquidate her favorite cooking pot and turn that into some capital? Unless it's an antique, right?
Yeah.
We're getting passed down trinkets. Your kids cannot compete against kids that are going to have hard assets, bonds, CUSIPs on equity stakeholders that the parents left them, trusts, deeds on properties. Your kids finna got to compete with that. So what our kids do, instantly go right into debt to try to find themselves in a way where they can make money to find a way to get out of that debt to only end up in more debt. Student loans out the wazoo, et cetera, et cetera. But we've been taught that's how you compete. Really? So if you open up a trading firm, the only debt that you incur, right, is what? The internet bill, cell phone bill, whatever, maybe. What's your overhead, right? That's my question. What is your overhead? Crickets. Stuff that you already have tapped into before you started it, right? Because that became part of your ubiquitous lifestyle of products and services that you already use. The capital, unless you borrowing capital to get started from, if you got Series 6 license and Series whatever, that's different because now you can raise capital. But outside of that, you bring your own money to the door. Now, this is just one of many different things. Now, keep in mind, I just happen to deal in the investment side of the house. Of course, we're not even talking about the real estate game because that's a whole nother powerhouse in itself, right? Yeah, I can honestly say I own properties. I get it. I know what it feels like at this point now to have got to a point where I realized when I was doing a lot of silly stuff, the importance of had I not made those decisions then, what I would have been, where I would be today, and that's fine because again, it's never too late to get started. But the thing is that you have to have that interest first, right? Your interest, if your interest level does not supersede your ability to feed, clothe, and shelter yourself thoroughly, then it's just gonna be like any other conversation, man. It sounded good that day, but I got to go back to doing my trivia stuff, bro. I got to go back to goofing off, and I got to go get distracted. I got to go play this game inside my head, and this is better over here than me finding a way to put some money in my pocket, right? Again, it happens at everybody's appointed time. And so it's not even an issue where you wrong because it's just that you might not be ready yet mentally. Right? They say the mind really don't develop to the age of 25, right? Especially for males, right? Because we too busy, whatever, trying to be, men, right? Not necessarily really being men though. We too busy trying to be a male, let me put it that way, and not men. Let me repeat that. We too busy trying to be males and not men. But when that light bulb goes off, then it starts to make sense. Because this is how your businesses is set up. Your business that you work for, if they're not publicly traded, right, they still feed into the system, right? The same system that these stocks and bonds also now account for. And now here it is, you can benefit from it from these items, right? So just going to the chart, Tesla XLK, technology. Technology is always what? Evolving, whatever, right? The overhead the technology has to deal with is very simple. I just kind of gave y'all that summation earlier. What are some of their biggest overhead in a technology producing company? Anybody? What's some of their biggest overheads they have to deal with? Anybody want to take a stab at that? What is their overhead in a technology producing company? Anybody want to tackle that in the back chat on YouTube? What do they have to deal with?
Getting the resource.
Say again?
Getting the resource.
So, see, getting the resources. So what resources in particular, right? Again, whatever they use, right? To produce or make their product, right? So if that's their biggest tax or liability that they incur, right? Now, if they've been used to getting it at this price, but now it's been raised to this price, well, what does that do to their margin value? Meaning the ability to make money at cheaper prices. That kind of what? Disturbs that a little bit, right? It puts more pressure on them taking big money hauls, and now it's been reduced because of what? The price of goods and services has gone up, right? The cost has gone up, right? Now, if they have to eat that cost, typically they're going to pass off through the consumer through a higher price what? Device. See how that work? Not rocket science, but a lot of us don't take that into consideration when we go out and buy this stuff, right? Man, I don't have, well, it costs people what, $70 to make that phone, $60 at most to make that phone, if that, in some cases, right? Again, y'all know the whole story with the Nikes, right? Jordan, right? It costs Jordans, a pair of Jordans to be manufactured, created and landed. I think around I think the last one was around what, $18, $23, somewhere around there, a pair, somewhere around there, give or take.
Yeah.
And
then you consider the shipping costs, shipping it over here, and the retailers and all of that stuff. I got a video about that.
Yeah, so you think about the cost incurring, right? So by the time it hits the shelves, that extra 200-300% markup that's on the shoe, who wins in that situation? The business owner do. Why? Because they have the ability to use societal pressures to levy their margin increase because they know people still going to what? Still going to pay for it. They've built up the demand to incite that level of what? Expenditure in a person's lifestyle to say, I got to have those. I don't care if they're 300, 400, 500. I got to have them. Manufactured, landed, out the door, created, $20 smart dollars to produce. So you ask yourself, ultimately, at the end of the day, does it really serve me to continuously be a consumer at this level and not want to be an investor at some point of that process? At least I can get some of my money back, if not all.
Real talk.
See how that work? That's the games that's been, and that's milk, cheese, eggs, bacon, shoelaces, baby dolls, hair bunnies, whatever, right? This is why China is kicking everybody behind, because they're willing to produce all the manufacturing, because everything in America has been shut down clearly in terms of manufacturing. They rusted out. America did it to themselves. They shot them themselves in the foot, right? Trying to be too fancy and hurt another aspect of society at the expense where it kind of degraded the growth of what this country could have really could be. Neither here nor there. Another conversation, another day. But that's the price of doing business. What I'm saying, in America's, commerce, right? Commerce pool. You have to deal with all that. The tariffs, right? Y'all, tariffs still are not over with yet. People just forgot about it because of COVID. Tariffs still on the table. They're still taxing China, and China's still taxing us. Joe Biden came into office. Guess what? Them tariffs are still on. You think he's going to let that go off the table just for a relationship with President Xi? No. So shout out to Trump on that side of the house. He kept that bag coming in. I think it was like I think it's like I want to say near $300 billion a year plus. He got coming back, from out of China back into America now. So whatever, right?
I was telling folks that, man. I was like, because a lot of us, we vote Democrat just based off, that's what our family told us to. But I always challenge people. I say, when you voting for a particular person, what are you voting for them for? Because a lot of people, Trump benefited a lot of people financially during them 4 years. Now the circus that he put on during those 4 years, is a big distraction. But if you looking in the markets and you own property and you own assets, Trump actually benefited you during those 4 years.
And that's has nothing to do with personality. That's just to deal with the bottom line of numbers.
Right.
So that's another part of a conversation that needs to be had, because we have to learn how to separate numbers from feelings, right? Numbers from, congeniality, aspects, right? Again, just because I don't favor the person or favor this, that, and the third, the ideology, I can't move in that perspective. I'm not saying lose yourself, or they say sell yourself to be able to acquire items, but we talk about things that are just ancillary or ubiquitous to our everyday life, right? Because they don't control that aspect of it. They just control a lot of the leveling of the policies that kind of waver in those things that you buy. Again, the goods and services that you get landed inside your home when you go out and buy it, or the property that you own that has now increased because of this, right? Et cetera, et cetera. Appreciated value of assets and the lowering of taxes, right? That says a lot about, again, the void of financial literacy in terms of our environment as a whole, because, again, we're too focused on the end product and not the beginning stages, right? Or what is the bottom line net positive by having a person that has this kind of ideology in place, right? Not to disturb my civil liberties, right? Yet I still can grow, a favorable, wealth regime underneath this society, right? Again, minus all the circus, acts, because he's right on that. Definitely, the whole lot of circus came out behind it, but a lot of the policies, definitely in itself, really gave people opportunity to expand themselves, and it did, because, again, think about that. What happened under COVID? Joker was kicking butt and taking names, right? And it is what it is, right? You can't negate numbers, right? They could be cooked and manipulated like anything else, but at the end of the day, it's a consensus rulership, right? Consensus rulership says what does the greater society do to benefit in this situation? Whether the net positive for the greater society from a numbers perspective. And you got to look at things from that perspective, right? Again, Democrat, Republican, whatever. Of course, y'all know them neither, right? At this point, if anybody, chooses a side, that's fine. But it's a lot that's in the middle that I think this is even more better. You got to learn how to leverage your vote, right? You have to be a power broker for your vote, which is my opinion, right? From my experience in life. You got to move as a body politic to get what you want, not what feels good and sounds good, but what you actually can get.
Yeah, people be voting on like a false sense of the morality that the politics be trying to preach to them. But.
Exactly, because that's what they've learned. It has, politics as a whole in America has morphed into a whole new different animal now. Now they're actually holding you hostage for votes, meaning they're holding back benefits that people need for votes now. That's how sickening it has it got now. It's a whole new different reality now. So again, convince me how they're looking out for your best interest, right? If they're more concerned about the political or the politicization of the scenario than it is for what you really need at this given moment, that you need it like yesterday. Now you're waiting on that to happen because they string you along, they kick the can down the road, you get all excited, and they just kind of hold you up. While you sitting there waiting, guess what we doing over here? Tesla, X, okay, Ford, whatever, insert, whatever. Because at the end of the day, this right here, right? This, it pretty much exempts you from all that clown and circus show stuff that they're going to take you through just to kind of really not do a whole lot for you. Over here, you got the power back in your hands. Why? Because this actually dictates policy. What do I mean by that? These corporations are the biggest power brokers on the planet.
It's kind of like the anatomy of America right here. You're looking at.
At the end of the day, these are the veins, the capillaries, the arteries of America right here. These little lines going up and down all over the place, red and green. This Hulk, what they call Incredible Hulk blood and red blood of America. This is what it is right here. They are your lobbyists, the Koch brothers and all them. They are your lobbyists and all that, and then some. Their businesses are just going to continue to do what they do. All right. So again, it just goes without saying. Again, I mean, just look at that. This is show me where America is crashing. show me where America is crashing. I keep scrolling it down and scrolling it down. I'm just saying, show me where it's crashing at.
Right.
I don't see it, man.
I'm just saying, show me where it's at.
See some dips every once in a while and just bounce right back, man. I don't know.
See how that works? So this is a game of patience. This is chess, not checkers. It's even more crazy because think about COVID. When they cut that first stimulus check, right? That was around May. Well, no, it was April. I think April of 2020, right? Majority of people still somewhat still okay during that moment, right? It hadn't really became a problem until we got mid-year, June, July, August. People started saying, okay, man, they ain't getting good work. They're going to cut the benefit, whatever. So that first stimulus check, what was like $1,200, something like that? That was a, man, if that wasn't what they call a get-rich token, if you utilize it properly and then go out and buy a cell phone, or unless you're going to work with that cell phone, and then go out and just buy you 2 or 3 pairs of shoes and liquor it up, the majority of people that reinvested that $1,200, they sitting very nice right now. Because know what they did? They did exactly what a lot of people they followed those circles, or they've been hearing about it in circles, be it Bitcoin, be it AMC, be it GameStop, be it Tesla, Apple, any of those stocks. A lot of those technology stocks that we talk about right now in the XLK. Again, we can use the XLK just in itself as that kind of branch of opportunity. We're talking about April, right? Around middle of April, XLK was right above the 200-day moving average. It got right back over the 200 moving average after kind of pulling back below it. We're talking about what, 60, 80 some odd bucks, right? If you bought, let's say, option call, because again, a lot of people bought options with that money because you get a lot with less. Of course, if you understand the ability, the understanding of how options work. And you still, again, if they bought leaps, meaning contracts further out until the end of the year or next year, whatever, you're talking about expansion. Just crazy amounts of money. AMC, we was trading. Matter of fact, we was trading AMC when it was down there like $2 and change. Like, no, it was like $2 or $3 a change, right? Before it made this big run because of all this Wall Street bad stuff, whatever. Going back here to the chart, see right here? Let me show you exactly. We all these lines you see, these things that we've been drew way back when it was happening. So this ain't no we came back and did after the fact. This is stuff that we do in real time. We clearly mapped out the $2 bottom in AMC, and it was weighted against the fundamental aspect that they were trying to remain a solvent business based upon them being able to still raise capital and pay off their debts because the moving industries were closed, obviously, right? Because of COVID, we want to sit in the theater and catch COVID. So they was up against the clock when it came to their bond or their debt note holders, right? Meaning, they don't want to end up having to go under and have to do a Chapter 11, right? Restructuring debt consolidation. So we start watching those things carefully. And then during certain critical time, right, going into a point where they had to come up with it, taxes out, things begin to work out. So instantly we say, okay, this is a buy opportunity. It's go time. It's go time. Several of us, we bought the $3 and the $3.50 AMC strike calls when it started bouncing off the $2 support there. They were like 40 and 50 cents a contract, I think that time, 35 to 40, 50 cents a contract for that $3.50 strike price. And these were contracts we bought out for like, I think half of the year or end of the year. They were that cheap. Well, we know what happened after that. The rest is history, right? The rest is history, what happened after that. The first spike was out of this world. It went all the way up to like $20 a share. Those $30 or $40 that we spent per contract end up being worth about what, $1,700, $1,800 a piece. So basically $35 turned into $1,800 a piece. Think about that for a moment. Now, this is the ideal that we're talking about. Of course, it's a hindsight 2020, but we were in it, so it's not even hindsight; it's reality. But this is what we're talking about by being ready, staying ready, so you don't have to worry about getting ready. Utilizing opportunity as as what it is. Right? It's the opportunity zone, right? The same could be said for GME, right? We know what happened with GME. It basically went the same way. It went from peanuts, literally, right? Peanuts, right? $7, $8, way back down. It was like $6 and change. But coming into this year, $19, $20 a share, and then we know what happened. Went up to they ain't near what? They ain't near $500. Think about that for a moment. Now, yes, it's a pump and dump. And that moment, it was considered 100% pump and dump. It was buying you euphoria or frenzy like a shark, on a sardine bait ball. They did exactly what a lot of people end up figuring out what they was going to do. The tulip mania all over again. To me, I'm not concerned with that. Why? Because my conscience clear as me when I understand the risk that's already involved. I'm looking for opportunity. So you mean to tell me that hedge funds, other people who own little financial institutions, they didn't get in on this run too? We would be ignorant to think so. So the same way they were able to put $1 million down, and you were only able to put down 10 racks or 1,000 or $100, they able to put in millions down. Imagine you put in $1 million at $40 a share, and it runs to 500.
Yeah.
That's how they got. This is how these people get. And they be walking right beside you. You don't even know it. This joker, they made a lick. They don't look the part. They don't care to look the part. They want to keep doing this right here and just be what? Not known for it. And just build.
Just incognito with it.
That's how it works. And the great thing about it, because you being in a position where you can tap the markets in this perspective, in itself, it's a digital banking system in itself, right? Fintech, that's basically what it is, fintech, financial technology. You don't have to walk around with the mega money cash cell phone, right? You don't have to have any of those kind of, illicit, issues with people sizing you about it, because all your stuff is digital. You walk around with this right here. This right here is this is it. This is my device. This is my tool belt, right? Joker on the construction site, he got the tool belt on, right? He got the Stanley decking, what they call the snap-on tools and all that stuff. This is my tool belt right here. In this thing right here, it could be a lot of zeros behind it, right? Okay, you want to rob me? Here, take the cell phone. I got, step 2-layer security, all that. You still can't get to the bank unless you can hack all that. Outside that, walk around like an average everyday person, with no care in the world. Right?
So I got a question about resource. Like the resource that these companies need, do they have their own market or stock?
A lot of them do. Right? And that's what's great about this too, Brother Zane, because guess what? Yeah. As we know, in any business, there's 2 monies, 3 monies, 4 monies, 5 money, right? We heard that saying before, right? You got your pipeline, right? Your supply chain, right? Your distribution channels, right? Right? Where do Nike, get their leather from? Right?
Yeah,
where do
they get the shoelaces?
Right, shoelaces. Where do Polo get their cotton from? Right? To make the Polo shirts, right? You see how that work?
Yeah.
Interesting, right?
Because
go ahead.
I got one stock in Cleveland Cliffs, right? And it's a sheet metal company.
Yep, Cleveland Cliffs. They deal in metals, right? Matter of fact, that's a good company. Why? Well, I'm just gonna say that for the CEO. He's a very colorful guy, right? I've seen a lot of his press releases especially when he do earnings report. But he's solid though. He old school with it, right? If you, I don't know if you know the CEO, but you look at this. Look at Cleveland Cliffs. I'm just gonna leave that right there. And then
Yeah,
what's online?
check that out.
Look at that. Look at that stock growth. We talking about coming out of last year, out of COVID, right? This was the COVID March lows, right? The COVID lows. We always say the COVID lows, right? Matter of fact, let me draw this so y'all can see what I'm talking about. This is the COVID lows, right? Let me draw that U-shaped bottom right there so we understand where it came from.
Mm-hmm.
So we're talking roughly $2 and change at that time, at the low, right? The low, right? Now, let's fast forward to where we at today. Today we're sitting at $24 a share. Now we just talked about. He asked the question, of course, whether these bigger companies buy a lot of these products, from who they or are they publicly traded too? Yes, they are. How many people need sheet metal? How many businesses would need sheet metal? A lot. And not only that, what makes it even more crazy, if we are in an inflationary period right now, which we are, right? Meaning inflation makes the cost of goods and services do what? Go up or go down?
Services.
Do the prices go up or down in an inflationary environment?
They go up.
They go up. So that means the cost to produce that steel or smelt or get that iron ore or that bauxite aluminum to make these metals, right? Go through your the alchemy, your metal, all that stuff, whatever. That means they have to pay that extra cost to be able to still produce them services for the company that need it. But guess who get hit on the back end? The company that's gonna buy it.
Yeah.
And then what they do when they finish the product, put it on the shelf to sell it, guess who also got to pay another little extra? The customer gonna walk in that door to buy it.
The customer. Yeah.
You see how that work? So it's leapfrog, right? That's how this stuff works, right? So there's always a behind the scene. Matter of fact, OLED, right? OLED was a company, they make OLED. Universal Display, right? They did a lot of the screen and stuff for Apple phones and Samsung phones. They do a lot of stuff for a lot of companies, right? They went through the same thing. Look what happened to them with COVID lows, right? It dumped, went all the way down to $106. Ran all the way back up to what? $250-$60 a share. Less than a year. Before that, look what the chart was doing.
Okay.
So that means it went higher during COVID. Because the need for its products that people still utilize at the time, the tech side of the house was just really needed, right? Because everybody was working from home. They had the need for devices. They needed, you see what I'm saying? Wherever there's a need, there's always going to be a product or service agent there to facilitate that. Okay, case in point, right? Because OLED, keep in mind, these Universal company, Universal OLED, they make a lot of stuff that y'all holding right now on your little cell phone. They make a lot of the screens, all that stuff. Corningware, right? Them Gorilla Glass, cell phone screens that are hard. Man, look.
Uh-huh.
Let's run over to what's name. Who was that? Okay, we just use this one. Since we talking about all the different stuff. How many of y'all ever heard of liquid laminatators?
Yeah, I heard of lumber liquidators.
Anybody that owned property or built the house from scratch, you probably heard of them.
Yeah,
right?
That's what I do actually. I'm a procurement coordinator. I send the materials. So
send the materials out.
Yeah.
So you already know.
Oh yeah, I'm all
Definitely.
up. Yep.
You understand the price of goods and services, commodities, and how the influx of those prices go up and down based upon the what? The market.
Yep.
Not the client, not the person that cut the tree. It's the market decides the price.
Yep.
Based upon supply and demand in a rudimentary sense, but however, it's all governed by what the markets are willing to pay for it for.
Yep. The futures contracts too.
All day, every day. Here we go. Now you. Let's go there real quick. Let's run over there real quick.
Yeah, the futures contracts, those dictate, the price of how shit gonna go, man. That's why I said I usually look at the major indexes like those to just get a sense, how certain markets are gonna move. Even with and after you go to this.
Mm-hmm. So you see right here, come over to investing.com. There's other places you can go, Bloomberg, whatever. See right here, say real-time commodities, right? These are all the metals, grains, cattle, whatever, right? Hard assets, right? Real money. This is real money over here. Let me repeat for the camera, right? This is real money right here.
Yeah,
Real money.
yeah. It costs to play in the futures market.
Right. This is real money. When I say real money, the items that's in here are real, tangible, hard assets.
Yep.
This is old school bartering 101. Now it has been morphed into a whole new different beast because of capitalism, right? But your real-time commodities, right, gives you a very, lucid picture of basically what's going on in your world that we have no clue about until we go buy it off the shelves at Winn-Dixie, Walmart, Whole Food, or wherever.
Coffee.
Or liquid laminated cocoa, right? We
Yep.
have to have a little laugh about London coffee. Like London coffee, what coffee fields in London or in Europe? I'll leave that alone. All right, but I ain't gonna never look. I'm gonna keep it 100.
Right.
Okay. All right. Yeah. Moving on. Yeah. So gold, right? Gold, right? Gold. We know about gold, right? We know what's going on there, right? Copper mine. Copper's been on fire.
Yeah.
Oh man, I been on palladium, crude oil, WT, Brent. Obviously, you know, to my oil, natural gas, heating oil, gas, RBOB, London gas, and again, you know, aluminum, zinc. I mean, you see what's going on here, right? Copper, tin, again, look at it, nickel, right? A lot of your cell phone, house furnishings and finishings that are, again, dealing with that stuff in your sinks. And we go on for that. Matter of fact, Obajane, Jamaica, they buy a lot of zinc, right?
Yeah, and I think bauxite is in the islands too.
Yeah, they do a lot of that, right? Again, This is those markets, right? This is how you kind of see what's going on in those markets when it's a good time to buy and when it's maybe not a good time to buy. Because they're prices, right? If you could buy ahead of in advance, stock up, that's good too. If it don't, rot or whatever. So that's how this stuff is all itemized for an economy to kind of make sense of it all. Right? Wheat, rice, corn, soybean, oil, meal, cotton, cocoa, you name it, right? Sugar, cattle, hogs, right? Feeder cattle, lumber, oats, see all that there? All that right there. Now, we talking about lumber since we was on that topic, right? Let me show you what this thing did when the inflationary pressure really began to mount up and hit this thing across the head, meaning hit us across the head, the end recipient.
Yep.
What this did during that moment, because the feds made it that bad for everybody, because that's what they did, right? Look what this thing did. The COVID lows, it was at 261. Because of COVID and the scarcity and less labor force in the market, because that's what happened when everybody ain't working, right? The cost of goods and service go up. This thing went from 261 all the way here to a high of 1711. Imagine y'all bought those future contracts down here on the COVID lows well into 2021, 2022, and just sat on them. You might have bought in the money down here at 260, 300, and it went all the way to $1,700 because some smart economic person out there saying, if they keep everybody locked down, inflation going to kick everybody in the teeth. Cost of goods and service going to go up. Let me plan in advance. Let me check all my nets, and make sure there ain't no holes in them so I can catch any aspect of income that I can for the future. That's what an economic strategist does. They sit around and plan for the future. They play chess, not checkers. If they bought anywhere in the money down here at 261, 270, 300 for those contracts, even 400, even when it's all again to break out from that point there, and they held it, and they bought contracts further out into that 2022 area, when it went up to $1,700, they retired.
Yeah, literally. And I think you get like each point it move up, you get like a certain amount, like $500 or something. I don't know.
It depends on it's the lot size and everything that come along with the contract.
Yeah, man.
And then the delta, and of course that's just the back end of the Greeks. But
right,
it's in this case, especially when you're doing futures in a lot of ways, it's a whole new different. Well, it's somewhat different, similar to options outright, but it's a different marketplace because you don't have too many hands in the pot in this derivative asset than you do in actual options that you're trading through the equity side, right? Mm-hmm. So it's really more stationary. It moves very methodical. It has more of a beta value to it, a low beta aspect, unless it's going through some kind of crazy stuff, in the economy. That's the only way this stuff over here really kind of get out of whack. Well, how do we know that? Because look at the history of it. See right here? The thing went sideways for what? Like forever. And then all of a sudden it did this. You see what I'm saying? So yeah, this is kind of how a lot of this stuff, works in a lot of ways. It's just like how is this even possible? Well, this is what we're saying again. You have to what? Stay ready, so you have to worry about getting ready. For that very reason, why it's important that we realize, just how important it is and planning ahead for your financial future, right? Y'all heard that conversation on that little commercial? Plan for your financial future and all that stuff, right? Yeah, okay. So you gonna do it or you gonna pay somebody else to do it? I think each and every one is well equipped to do it ourselves. Why aren't we not?
I'm from
Convince me. Yeah, convince me you're not. That's all I'm saying. I'm waiting for people to convince me that you're not. You got bills, you got all your things that you have to take care of. You're doing the same thing. You planning for that, right? You having outflow. Well, you need to plan for inflow, right? Plan for it, right? Gold, same way. Gold has been on. Gold is always what they call the most universal hedge against what? Inflation, equity. Go ahead. I'm sorry.
No, I was gonna say inflation.
Yeah, just frothy equity environments as well,
Mm-hmm.
right? Because it's the only true asset, literally. That, of course, when I say society as of today, this modern society really now it had its purpose in place back in the old days too. We know about Mansa Musa and the family, all that, and the tribes all over the continent. Gold was just like everyday stuff for us, right? Ain't no big deal to us. But other people who didn't have that, when they came in contact with it, just blew their mind. Oh, this is nice. Right? Income award, income thievery, and y'all know the rest after the history after that. To us, it was nothing. Like, yeah, we got plenty of it. Matter of fact, go get your Cuban link over there by Ubuntu. We got you. Right? Way before y'all even knew about a Cuban link. Some joker had locks of what? Gold, and man, look. But again, when we talk about money, that's what I'm making a point here. It's the only hard, tangible asset they look at as true money, right? True money. Before we left the gold standard in the 70s. Gold seemed to have been all over the place, right? But one thing, if you think about it from its historical context, right? Right. Put on the monthly chart. Ever since gold began to be what they call publicly traded in this aspect, beyond that having to go buy it through the brokers at that point, whatever, before they made it like a public, instrument to that degree where investors can get in. Look where gold came from in the 70s. Basically 1980. We're talking about $250 an ounce back in 1980. Keep in mind, these are almost what they call spot prices, meaning this is basically what it was without all the inflationary stuff that you deal with when you go buy it from your jeweler, right? These are dang near at spot prices. So you mean tell me an ounce of gold back in 1980 was about $257 for an ounce of it, right? It hit its high peak around about the 8th of 2020, right? Meaning, the 8th month and basically August, right? Around $2,100 an ounce. Convince me how gold, right, is not a good investment or a hedge against equities and other stuff like that. I mean, it's another asset class or diversification you can have in your portfolio. Ask the raw metal or the coupon that they give you if you own the gold and you have it sitting in the vault, or you just get what they call get a paper coupon equity stake in terms of some of these junior miners, and it's still the kind of same thing without you actually having to own the physical gold. You still get the value of it in paper form. How it's not a good investment? So this is what we're talking about. There's so many different lanes we can travel down. These things that we see every day in passing, we're buying it, we see it. We're not even thinking about it like that. We're like, man, I need the product. I need the end product. I need the end, that kind of reality. So again, thinking like power brokers that we're trying to now, infuse into a lot of our daily life now being acclimated to this industry. Yeah, you want to go back and do your research, right? You want to go back and do your homework and realize, man, they've been making a killing for a long time, right? For a long time. Keep in mind what they call the old money. Joe got old money, bro. Old $100 bills, them skinty $100 bills, right? Old money. Again, we're not even talking about the oil side of the house. Forget about it, right? But yeah, metals. I mean, you get it. So yeah, everything has its place uh, in the financial food chain, as I like to say. That's basically what's going on here, right? And people are starting to realize now the strength value of this. The palladium been kicking butt, take his name, right? That's another one that been rocketing, and doing numbers, right? Palladium, right? Little old, what do you call it? Little old palladium, right? Same reality. Like people like palladium, man. I don't remember last time I touched some palladium. Well, yeah, it's starting to rebound now. After it made a big run, it had a big run. I mean, man, back in what was that 20? Let me go. Hold on. Let me go to basically this year alone, 2021. But at end of 2020, coming into it had a massive run. Let's go to the 1 month chart, so you can see what palladium have done since 2004. How many of y'all knew about palladium back in 2004? Palladium. Anybody? Anybody knew about palladium back in 2004? Anybody in the back chat, YouTube, anybody knew about palladium?
No, not at all.
Look at where it's at today. Look, hold up. I'm over here in the wrong.
I got some boots in that palladium.
Right? Let me go over here.
On.
Damn, mess with heart. Where we at? Okay. Look where we at. So you talking about for an ounce of palladium, $192 back in 2004. It went up and hit a high literally about 3 months ago of 3,019. As a brother Kwame Brown said, you still think I'm crazy? You still think I'm crazy? Why I spend a lot of my time in this? Still think I'm crazy? I'm playing catch up for a lot of years, and I employ you guys to take that same mindset, because again, this is how you build wealth, and it's working for you. You're not working for it; it's working for you. Literally, you go to sleep, it's still working. You wake up, it's still working. Still think I'm crazy? Palladium, right? Palladium, right? Right? Like I love you. Practice. You talking about practice? Practice. Yeah, practice. We need you, Alan. We need you to practice, because in that moment you gain so much more perspective, right? It's ongoing, right? So yeah, it's so many different lanes, man. This is just the commodity side of the house. Of course, we know about forex. We definitely know about the crypto side of the house. I mean, yeah, come on, seriously. I mean, seriously. Those charts gonna look like the same thing we just saw, basic for a lot of those commodities. Why? Because number one, it's a new asset class. Number two, it still have adopted value. People still adopting it. Number three, it's gonna be it's kicking in the door in a way where they can't deny it any longer, and it's providing a lot of innovative technology, especially the blockchain, that the world needs. We need an overhauling. The old antiquated system has robbed everybody enough anyway, right? These old central banking systems, they've been robbing people for years, right? That's why I laugh at people when they be talking about their little bank. Your bank, man, you don't get out of it with that stuff. We don't talk about no banks, so, man. All right, no disrespect, right? But yeah, so we just talking about 2010. Now we know it was a lot cheaper than that. That's when it became at this point, what they call the publicly traded instrument, where they can take accountability or record keeping for. Before that, Bitcoin had been around a little bit before that too. So we talking about, going back to that whole legendary, the guy bought a pizza with some Bitcoin. Well, that pizza now is worth what, billions of dollars, right? Yeah, that guy. Imagine who that guy was. That guy. He gave away Bitcoin for a pizza, and it's worth billions now. Right? Think about that. Same scenario here. Y'all see it.
Hey, I was telling Chavis and Sutek, I was having a little brain fart moment. I was thinking, I was like, Bitcoin and Ethereum are like gold and silver, digital hedges, because they move similar to each other, and it just remind me of gold and silver, Ethereum and Bitcoin.
Well, yeah, it all in my understanding of in terms of that. Again, like you said, right, it's definitely a hedge against uh, you know equity side of the house, right? The frost value side of the house, right? The frost machine side of the house. It's a not even derivative. It's a complementary asset to that of inflation. Again, tulip mania. It's a again. It has use case too. That's what's crazy about it. It has use case, right? In terms of blockchain. Now, some of the other altcoins here and there, some of them proof of stake, proof of all this, we get it. But utility values, right? Utility coins, whatever. Their underlying value is anarchist, right? It's anarchy 99, right? To the ideal of the old status quo of robbing people through what? The banking system, right? This removes the middleman, puts all the power with a transparent ledger that everybody can see. Your brother in Zimbabwe can see the same ledger that I get to see right now. And it's what? It's spot price based upon what it's worth at that point. No inflation, no extra taxation, nobody manipulated, no nothing. Can't nobody do to manipulate it from that perspective. And the central banks are scared of that. It's without doubt a hedge against the true criminals of this world. And we spoke about that earlier, right? The axis, right? I gotta go. Y'all know what I'm saying when I said the axis. It puts the power back in the hand of the average everyday person, patron of the world. And it's a 100% transparent ledger that everybody gets to look at.
Through digital dollars?
Well, that basically, in a sense, that's what it is in terms, that's one of its unique characteristics, it being a digital dollar, another transferable instrument that you can now exchange into whatever your fiat currency is that you are within your society.
Uh-huh.
But in that moment, you're still utilizing under the spot prices that the world sets for it. You see how that works? Meaning all of us are now collectively incentivized, be it we holders of whatever, and whatever the price is basically a static price based upon our value that we set.
Right. So the exchange rate system don't really control that.
To a degree. Now, because some certain exchanges that are offered to their clients to be able to trade it, they get to add on their little aspect and taxation here and there too, be it through fees, right?
Yeah.
Be it through the level of how they move it. But we talking about minutia in that perspective. But we just talking about. But guess what? There's a way around that. You just you go direct to what? Direct to supplier, right? You go direct to market. In this case, when we say find those scenarios that put you at spot price based on what the level price is, and you just trade it through that environment.
Uh-huh.
But either way, you're still getting it respected to that of what is already its natural worth value to it, right? But the one thing they can't do, in terms like how the central banks have set up the bank system that we all having to deal with, they can't constantly make money off you as the holder of it once you got that ticket in your hand.
Right.
Unlike a bank account, it can continue to leech off of you, right? The fees and this, that. So once it's one and done, I'm done. Either in the door or out the door. One and done. That's it, right?
Mm-hmm.
That's it. And it's cold wallet, right? Take it with you anywhere around the world.
Yeah. So what's been going on with the doggy coin? At one point, I heard everybody jumping up about that.
The Dogecoin is called Dogecoin. But it's the same thing. It's the same reality. It's the same reality, right? So, matter of fact, you're talking about all the different exchanges. See all the different exchanges right here?
I'm looking at it now. It's like it don't have no value like big Bitcoin and Ethereum.
Well, of course not, because it's still late to party. It had an exception, inception literally last year. See what I'm saying?
Yeah.
So that means it's like new, right? New, like new,
Right.
right? So in that understanding, of course, you say to yourself, okay, well, if it's that new, of course, it ain't haven't been around that long, hadn't built up that level of value, right? However, it's worth value in that short period of time exceeded that of Bitcoin over the trajectory that it took Bitcoin to get where it's at today.
Yep.
Let that marinate for a moment. Here's how I'm gonna show you this. We'll say numbers don't lie, right? See right here on this inception day right here, 2020, March 2020. Look on the top of my screen right here. We see the OHLC up here, OHLC at the top of the screen up here. What's the price of the lowest price of Dogecoin on that date? What it was? Anybody can see that OHLC at the top. What was the lowest price of Dogecoin up there?
Oh, you said the low of it?
Yeah, the lowest price on that date where I got my
0.01145.
So that's what?
Man, that's like 1/100th of a penny.
Of a penny. 100th of a penny. Nominal value, 100th of a penny. On this date, a year and 2 months later, I was like T.I. said, a year and a day, right? A year, 2 months later, it hit a high. What was the high price on this date right here, guys? Anybody? What's the high price?
72.5.
72 cents, 500, 400, 4,000, 10,000 of a penny, right? Right? Put it all in context. So instinctively, what was this percentage gain in a year and 2 months? Well, how do you figure out that mathematical equation? Is it multiplication or division to determine percentage?
Damn, man, you gotta divide. You gotta divide.
It's division,
yeah,
right?
You gotta. Yep.
Mean high price from low price, basically.
Yeah. Divide the high by the low.
So if you divide 72.54, right, 1, divided by 0.001145, what do you get?
Somebody gonna have to type that in. I can't do that on my head.
Hey, man.
Y'all know I love doing. We do this stuff over when I go on my training session. We used to do, right? This is what we going.
Now you be having training sessions and stuff.
Y'all offer training services too, and besides, this is the kind of stuff I do off the books, right? Because I also I'm partnering with a business, and I also do my own thing, behind the scene where I do like $1 a day scenario. It's a charge, but it's more of a donation, right? It's for people who's serious, so it's based like $30 a month, right? And you pay $1 a day to get this training.
About it, but I'm like, you don't never promote it because I would like to support. I know you support us, and I like this shit. So
yeah, I rarely, y'all know I am. I'm one of them old school with it. So yeah, I just kind of get caught up in whatever. But I actually I actually pinned it recently to my Facebook page at the top. So if you see it up there, We Trade HQ. If not, I have people that come to me directly, just cash at me. They just hit up on the cash app. Here's for my my monthly value. See you in training, right? And we just get at it.
yeah, man, I might have to donate to that because I want to be a part of that.
No problem at all. And so when you think about it, again, that's why I love this stuff too, because this ain't me hype myself because I don't anyway. Y'all know that. That's why you got to ask about it. I don't hype it. But when we think about what they call money well spent, y'all heard that saying before, money well spent. If you're trying to learn how to make money, the worst thing you could do is have to go in debt to try to figure out a way to make that money. Make sense? Why you shouldn't have to pay exorbitant amounts of money to be in a position where you can put yourself in a position where you can win and trying to better yourself, right? Now, this is just me. Now, I have no qualms about how another person run their business and do what they do. It's the reason why I haven't even went up on my price since day one. I've been the same price ever since, $30. This much in this length of time in the game. My thing is, it's really a setting place to see how serious you are. Because the saying goes, if you really about that life, you're going to put your money what? You're going to put your money up, right? You're going to put your money on the line. Now, this ain't nothing that's going to break you, but it's also going to show me your interest level. Because you're trying to learn how to you're going all the way back to basically square one in a lot of ways and trying to figure out, man, I've been hoodwinked, right? We all been hoodwinked in terms of what we've been taught and told how we should be kind of moving about life, right? School, get a job, educate, all that, whatever. Education, get a job. No, you need to understand how the asset game works, because that's where the real money's at.
Yep.
Right? We talking about 5.7 trillion now? I think it was it used to be like 5.2. Now I think it's around about $5.7 trillion is moved around the world daily, every day in global transactions through these things you see right in the instruments, currency pairs, forex equity, whatever, daily. Meaning while you working somewhere on the job, these numbers are being tallied and money being made. People are just transacting, getting paid, getting bags. And so I used to ask this question to a lot of people: how much of that are you getting? As the commercial, what's in your wallet? What's in your wallet? Literally, right? The little credit card commercial. What's in your wallet? Right? Not so much even your hard wallet, sometimes your mental wallet, because you got to have the knowledge first, right? So you need to have, again, a group of people, an organization, a tribe, or whatever community that you can go hang with, not feel pressure, ain't nobody critiquing you, judging you. All that stuff ain't over here, ain't that silliness over here. We about getting, we about working over here. Because this is what we're trying to do. We're trying to dissect and reverse engineer a system that has been really cloaked and sealed in a lot of mystery, because they don't want the average person to learn this before going to school to get an education so you can get in the debt to feed the system. On that perspective, they want you away from that, right? In terms of this stuff, they want you away from this and get you funded towards that, right? Because that's where you incur your most debt, trying to do it that way.
Yeah, and the thing is, like, when you're on a job, they'll ask you if you want to invest in the company and give you papers for that.
Notice that you got to wait till you get in there to figure out you can get that kind of reality, right? That's when you get your 401k, your drip funds, and Roth and TSP. See how they get you? It's crazy. Now, outside of that, I always ask people a simple question: convince me how you can't do this on your own. Why do you need somebody else to teach you how to deal with money?
Exactly.
I see. I've yet to find a joker, and I say this a lot. I've yet to find a joker that find a stranger on the street and say, "Hey, bro, hold it $500. I'll be back 3 months from now." I've yet to find somebody to do it. If you just give it to a homeless, that's one thing. But I'm just gonna get somebody else to hold my money for me. Like, they don't do that, right? Where they do that at? Well, we kind of sense to do that when we're giving it to the banks without a real true plan, whatever. You kind of sense to doing that. When that money more suited, if you learn how to manage it yourself thoroughly, well, your return on investment can be just as much, in my opinion, greater than that what the bank can give you on the money market account, because they're using the same system that you can just go direct the market to and cut out the middleman. All this stuff we did, look at lumber, coffee, feed cattle, corn, equity, Tesla, Apple, Bitcoin, what? Right? This is it. This direct to market. This is direct to market. And like anything, you're just saying, okay, well, in the grand scheme of things, where do I fit in, or how can I utilize this instrument, this financial vehicle? I call them financial vehicles, right? This instrument here to help me get from point A to point B. Right? Again, anybody did that math on this real quick yet? I know I got sidetracked a little bit, but I want y'all to see this stuff, because this is stuff that gets me excited every day. Like a new kid, right? Every day on Christmas. What's the percentage gain on Dogecoin in a year and 2 months? Somebody give that math real quick if y'all don't mind. Right? That's use them calculator, right? You ain't got to use the old school way unless you ain't got no choice, right? It's a division equation. It's definitely division. When you're doing percentage gains, you divide, right? Top from the bottom. Anybody, real quick, anybody in the back chat got on YouTube side?
That's the numbers.
Oh, I'm sorry. Let me go back over here real quick. So the high was 72 cents, right? 72.5410, right? As you see on the OHLC at the top of the screen up here, right?
Yeah.
Divided by the low, of course, when they open that perspective at 001145.
It's about 20,639%. 21,000.
It's about 21,000%.
Yeah, about 21,000%.
So you mean to tell me in a year and 2 months, you gain 21,000% in this asset from peak to trough, right? That we call peak to trough or trough to peak. $21,000.
21,000%.
Say it with your chest over. You see what I'm saying? Percent, not dollars, but percent.
Yeah, because I always tell people percentages are different than dollars. You always want percentages. Like if you put $100 down and it goes up 20%, in that case, you made $20.
You made $20.
Yeah, but you always want to you always want to chase high percentages. How much can you yield on this particular security? What's your percentage? It's all up because the inflation is based off percentages.
There you go. I want leveling. I want leveling agents. I don't want static pricing.
Right.
Only thing I want fixed is my houses. Right.
Exactly.
That's the only thing I want. Mortgage. That's the only thing I want fixed is my mortgages. That's
Right.
it. Right. And when I played with adjustable stuff at the time, I did it at the right time. You got to be quick on the draw. But outside that, that's the only thing y'all should want fixed is y'all mortgage. Everything else, you want percentages. You want things to be able to move and breathe along with the economic ebb and flows of life, because again, that gives you more probability of what? Growth, exponential growth, as they like to say, right? And so we're using algorithmic curves to kind of project the future. That's what they do with the dot plot stuff, even with the vaccines to the debt inflationary tactics and tools they use. They're playing off that same reality. They dealing in the percentages, right? So what's the probability here? Well, the probability is blah, 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 blah. So when you're mapping out an instrument or a financial vehicle like these stocks, you're trying to map the percentage value that you can benefit, because you come in with a block mindset. You know what you say to yourself? You come in and say, you know what? I got this. Let me go over here real quick. Sorry. You come in and say, I got, come on, thing. 1 second. All right. Hold up, guys. 1 second. This thing acting weird now. That's why I like using Zoom when I'm doing these little snares like this. Okay, there we go. Oh, I see what's going on. It's just it's sticking. So you come in with 10 racks. They say, hey, we could do this right here. We can skip to the chase and we'll just go ahead and give you a static payout, right? Over what we're saying, 20, let's say 2,000, right? We're going to get a static payout of $2,000 now, right? Or you could just leave your money in the market, right? And then we'll let you dictate what you want to get out of it, right? Would you choose the $2,000 payout off your 10,000 racks, or would you go for the ability for it to have, a percentage gain, right? Knowing what you know now, of course, you say, oh, well, I would take my chances on the percentage gain. Well, because if you already got in with the mindset that you're here to grow this money, right? Some people say, well, no, that's a lick. I'll take them $2,000 up front right now. Now, but here's the deal. Here's the kicker. If they tell you that you can never come back into the market again, you only take this $10,000, this $2,000 at this point, or at least, for next year or so, then yeah, you're like, no, I don't want to do all that. Right? But what I'm getting at is you have much more power when you're in a position where you can dictate your worth value based upon the market analysis, right? Market, value and all that stuff, by being patient and letting things kind of work itself out. Now we just talked about it. It's up 21,000%. So everybody that bought down here, when it was at 001 whatever, they bought whatever, right? Let's say okay, that's over here. So let's say they bought $1,000 worth, right? We use a base of $1,000 worth, because I know a lot of people actually did. Sure, I know some people that did that. True story. It went up 21,000%. Right? 21,000%. What's the math on that?
You got to times that.
Right. Now we deal with multiplication. What's the gain on that? What's the 21,000% on $1,000?
It's a lot of zeros.
Use some calculators, guys. We work over here. Get them calculators out. Come on, guys. Come on, man. Come on, man. Y'all not. Let's go.
All you gotta do is move the decimal point over, because you're just dealing with
you're dealing with
whole
what?
numbers, so.
Whole numbers, right? Whole number integers at this point, based upon the percentage. Well, whatever the numbers is, that the bigger number, you trying to compensate for those that integer whole in this perspective. So how many numbers you gonna move the decimals over?
3.
So go ahead.
Oh well, yeah, I was gonna say 3.
So if you move it over 3 places, that means if it's at 21,000%, you move decimal 3 places over from the beginning of the 2 or at the area of the 0 in the back.
You do it at the back.
You do it at the back. So how many places you gonna move it over?
3.
3 places to which way? The right or the left?
Add 3 zeros to the right.
So add 3 zeros to the right. right? So if you add 3 zeros to the right, well, how much is that?
All right, you're gonna have to give me some commas in there so I can see.
Right? I'm saying
Hold on.
Hey, Oprah, right quick. Are you on the screen?
yeah, can
Cause we,
y'all can't see it?
yeah, we just on the YouTube screen with us at the bottom of it.
Oh, hold up. Hot dog it. God, I'm sitting up right now. I thought it was set where I can hold up 1 second, guy. My bad. Yeah. Okay, let me do this. Let me just go see. That's why I said one thing I love about Zoom because it shifts around. You got to do it here. Let me come here. Sorry. All right, there we go. Can y'all see it now? Can y'all see it on the YouTube side? Everybody can see it.
It's just a blank screen.
Can y'all see it?
It's just a blank screen on my side of to the StreamYard.
You might have to go out. Come. Let me see because anybody.
I see it on my end.
Y'all can see it. Can y'all see it? Can everybody see it on the YouTube side? Let me come in YouTube. Can y'all see it on the YouTube side of the house? Everybody over say you can see it. Stay focused, Brother Ramsey. I see you going in the back chat. Stay focused, Brother Ramsey. We talk about money now. Stay focused, Brother Ramsey. Let's focus on this money right now.
Yeah.
You over to get it in on the YouTube side.
No, it's good on the YouTube side, Oprah.
Okay. Can you see it inside in here, the StreamYard now?
No, I can't
not
see
showing?
it. Yeah.
Yeah, try to go out and come back in possibly.
Yeah, I was gonna say it might be him. Chavis, you still in here?
Yeah, he just came back in.
Oh, can you see it? Can you
It's
see
about
it?
2 million, huh? How you want to go look at that calculator?
All right.
We're
Yeah, so
back too far.
y'all got it now? Can y'all see it?
Yeah, it's good now. I can see it.
Okay. So again, we talking about $1,000 at 21,000%, right? So again, y'all know you just crank your calculators up. Calculator be acting up sometime, right? When you pay them bills, they be acting up then. But use your calculator and tell me what you get there. I mean, it should be as easy as plugging it straight into your phone because some of y'all got the percentage thing that you can already add to it, right?
21.
So $1,000.
I mean, that's 2 million.
21,000%
Percent.
is how much?
1,000 times 2,100 is 2 million. You said percent though.
Right, 21,000% times $1,000.
Say 2 million.
So he's saying 2 mil, right? Anybody else want to jump in there? Y'all know I do this stuff a lot. I do what they call a lot of tricknology in this perspective when you deal with the numbers, because I want it to become a consensus of how to do it right thoroughly, right? Again, you're taking $1,000 and you're trying to ascertain.
You got 21 mil.
So he's saying 21 million. Woo! Right?
Mr. Zero.
Think about it for a moment now. Let's do the math.
Did I miss a zero?
I don't know.
You got 21,000, right? Set times 1,000. So 100% gives you what? Another 1,000, right?
Okay, my bad. You got 210. Was it 210? Oh, you got me.
10,000.
Yeah, I know. Yeah, this how I love this stuff. I love this stuff. We do this a lot of training. They'll tell you we do this a lot of training, boy. Joker be like, Joker be in there, Joker they got calculator, trigger, and scooter. Like, God, dog, but but that shows you how sometimes we get we done left a lot of this stuff. We think about it because we can using it every day. Unless you work in the bank, right? You're like, dang, what that 21,000% again?
Should be 210,000.
What you got? So you got 210,000 over.
Yeah.
So we got 210,000. Anybody want to challenge that? Anybody want some smoke with that? Anybody not sure about that? Anybody trying to figure out what's going on with that? So you're saying $210,000 from 1,000 at 21,000%. Anybody Not sure what that is, how you got there, whatever. Anybody?
No, I'm not sure how you got it because I got 200,011. I got 211,000.
Well, keep in mind, we got 21,000 times 21,000% times 1,000. So you know it's gonna be 21 and nothing else, right? Because we're dealing with a whole number of integers in this perspective, right?
Yeah.
So you know it's gonna end up being 21 something, right? 21 something, right? Now you just got to figure out what the other zeros are gonna be look like, right? What the other zeros gonna hit like, right?
Okay, yeah. So what we got to do is I got it.
There you go. Break it down over.
Yeah. You start at the 2, and then you just scoot the decimal point over. However many zeros you got 210,000.
Okay, I got it. I was at.
Go ahead, over. I'm sorry.
I was adding the percentage. That's why I got 21. That's why I got 211.
Yeah, I messed up the screen. See, I hate these little things and messed up my screen. God. All right, don't worry, I'll pull it back up. So you got 211 now. That what you got, over? Everybody got 211. Excuse me, 211. I mean 21.
Yeah, that's when I added, but when I multiplied it, it went down to 210.
All right, so let's go back over here. All right. So an easy way to do it too. Like, you know, everybody do their math and whatever different, right? But basically, all you're doing is you're doing the same way you would do 21,000 times 100, right? If you did it that way, of course you get 200 and $21 million, right? Right? And you're dealing with percentage value, right? So percentage value of 100 always yields you a two decimal integer placement, right? So all you would do is just take that. Let me put that other zero up there, right? You would take that two whole number integer there and just move the decimal place of 2 places to the left. So you got 1 there and 1 there, right? So that yields you at that point $210,000, right? That's just another way to do it. If you try and plug it in through your phone, the other way is like it's long stuff, but that's how you would do it on that side, right? So again, we're talking about $1,000 turning into $210,000, right? In that moment. Seems like a pretty good investment to me.
Oh yeah.
That's almost $250,000, right? And that's a year and 2 months. Of course, if you invested, 10 racks, you already know you in the $2 million account. No people that did that, right? Know a few people here and there that did that.
Yeah, I need another stimulus so I can do that.
Right? Bro, say, where them dollars at? Where them stimulus checks at? But that's what we're doing during the COVID. A lot of people, on our little side of the house, y'all, we were shaking and moving, right? And again, some of the opportunities don't come around so many times, guys. That's why I'm stressing it. But why? Because see, the markets knows how to feed off a good opportunity. What do I mean by that? These people are sitting around greasing their lips. They doing what they call the Birdman, that Birdman thing when you rubbing their hand like this, we're gonna eat. That's what wealthy people do during chaotic situations. Why? Because that's when the moment where you make the most money. Why? When everybody panicking and running, that's when people go get paid. Right? As the Warren Buffett saying, right? When everybody's fearful. When everybody's fearful, that's when you get what?
Everybody start spending.
Greedy.
Right.
You get greedy, yeah.
That's when you get greedy. And you're right, because that's when they start spending and trying to sock up in this. They start depleting, right? They start losing assets at that moment, right? That's when you get greedy. And when everybody's greedy, when everybody took the boat on the other side, when everybody's greedy, that's when you get what? Fearful. That's when you start ringing the register and taking you some money off the table, taking you some profit off the table. Think about that for a moment. Right?
Yeah,
So
people start like scarcity and everything like that.
Right, and that's for the economic data, because how the data tracks itself. That's at the thing called PE, or forward PE ratio, or TTM, trailing 12 months. Y'all probably hear about these things. The more you get acclimated to them, they're always projecting into the future. That's what evaluation is. Evaluation is a projected worth of what a person or entity might be worth on a 52-week trailing period. That's why they have fiscal calendar. They it's blocked in 3-month halves for a reason, to kind of, right. That's how they hit your marketing too on holidays. I'll leave that alone. Another conversation for another day. That's how they get all the money out your pocket. They shake you turn you upside down, and shake your pockets there all the holidays. They do that for a reason, to boost the economy, right? And people go along with it. No disrespect if you partake in those things. I'm just saying this is how they get you, right? I come out of market. I come out of international market. I know
Come about Black Friday and Cyber Monday.
all that stuff. Easter,
Christmas,
all that, every Christmas,
Halloween.
all of it.
Consumer cyclicals pop off during the fall, man. People spend a lot of money in the fall.
Cyclicality, seasonal shopping, seasonal expenditures, seasonal spend. They shop now. They do capex spending now to plan for that shopping rush, and they hit you hard on the back end of the year, right? They hit you hard on the back end of Halloween, right in Thanksgiving, right into Christmas, right into New Year. They got you real good, and they know you can get your stimulus check, or excuse me, your stimulus check, your income tax check. January, February, you finna use that to pay off the debt that you incurred during the holiday blitz.
Yep.
Got him. That's how they get you. Over here, be like, man, you better get out of here with that stuff. We don't do that stuff over here.
No,
we invest over here. We don't spend no money there. We plan our own holiday. We make our own holiday. We do our own spending. Why? Because we know how to look at the market and figure out when it's a good time to buy and when it's not a good time to buy. Cars, houses. We can study that stuff and see what's going on when it's the best time. Do you go out and buy a house during the moments when the interest rates at exorbitant skyrocket levels and the economy itself is not necessarily at that level of peak employment and raise value to be able to buy a house at that moment? Or do you be patient if you can and wait for the rates to come down? Like right now, when interest rates are basic at dirt levels, we're at a quarter basis point from being at zero. Is this not the best time to buy a house if you got your finances right?
It is, man. It definitely is.
This how rich people power up and level up against people who ain't got assets. By the time you get your finances together, guess what happened? Bonds and yields back up way up here.
Right. It's done click off.
4%, 5%, 7%. God dog, bro, was just at $1 the other day, but God dog, what happened? Well, this is what happens. So, see what I'm saying? Again, we playing catch up. That's all I'm gonna say. We playing catch up. But it's fine, because guess what? It's never too late. A lot of people became millionaires and billionaires because of COVID. We still in COVID, but at the crux of it, the thick of it, the inflection point, a lot of people became 100,000aires, millionaires, and billionaires just because of COVID.
You ain't lying.
People, y'all just saw even with the Dogecoin. Dogecoin turned somebody into 100,000 there in a year and 2 months. Some people less than that because they were buying in at that point when they just had more money capital to put on 10 racks. Some people I know look, it was just crazy out there.
Yeah, man, I'm trying to hop in that little hopscotch right there. That double dutch, I mean.
Yeah. Yeah. So it's about planning. It's about having goals. It's about being realistic. It's about understanding this is a game of what? Chess, not checkers. You have to have the patience and the wherewithal to say, okay, I can strategize around a lot of different things I know I'm good at. And I say this again, when it comes to money, convince me how you need somebody else to strategize your money. And if you're that person that just can't really do it on your own, you need somebody else, that's fine. But outside of that, if you a person that like money, deal with money, then I'm looking at you like this right here.
He crazy.
I'm looking at you like,
yeah,
I'll be there. Bruh, you tell me you got to pay this dick over here to protect and watch your money, tell you what to do with your money. Come on, guys. Come on, use it. They say use it or lose it.
And they ain't doing shit but losing your money anyway because they fucking triple leveraging assets and getting hit. Because a lot of people got hit during the GameStop. That hurt a lot of people's 401ks. Because the reason, I don't know, have you broke that down? The reason why folks got into GameStop and rose the stock price up?
Well, it was what it was, like I spoke about earlier, and kind of in passing. Like anything, it was opportunity for a moment. That's why I said a moment. Investment thesis never gives a person credibility to say that this is an investment at the level if you're buying it at $100, $200 and the valuation of that company is not worth that. Why? Because they're still dealing with what? Real world problems in their business model. Convince me how everybody running the GameStop if number one, we on shutdown. Number two, games are now moving online. Number three, they got all this taxing you got to pay for property value and all this stuff like that. That also takes away money from the business in itself. Besides people not coming to doors and spending, how they work this value at this point in time. No more than the fact that people just ran it up because they had a liking to the stock. That's the paper side of the business. That's not the hard and tangible asset value of what the business is really worth. See what I'm saying? And guess what? All that stuff is public record too.
Yeah, I was gonna say, like, a lot of the hedge funds, they had they options placed, and they was betting that the stock was gonna go down.
Yeah, that's the squeeze side of the house. Yeah, that's just what we call a gamma squeeze. It was a gamma squeeze that happened, right? They had net negative gamma against those who were going long, so they had obviously, like anything, the market may have to buy back those shares to hedge against that imbalance, and they couldn't because they had over leveraged themselves against the other side of the trade. Exactly. Right. And so basically, when you look at the auction market shows you basically what that balance should look like on any given day. Right. So you take a scenario like TAL, we just talked about that earlier, right? Just on GP. If for any reason,
now if you sharing your screen, it's on the Doge screen.
Oh, I forgot.
Thank you this time.
Thank you for telling me because y'all know I get going. Sorry, forgive me.
Yeah, you said stop you if
interrupt me because y'all know I get going. So if you look at TAL here, what is the highest strike price you could buy on this order flow chart right here?
I think it was like 25 last time I looked at it.
Right. In turn, the one I'm on now, can y'all see it? Can y'all see the TAL screen? Is it showing?
Oh.
It's bar chart. I'm on.
It's showing.
What is the highest strike price you could buy? These are the calls right here.
135.
All right, so 135 is the high strike price. That means that everything above that is what they call gamma rated, right? It's beyond what they accounted for, right? So they can only account for that value of equity in the market or that derivative, because that's a derivatives option, that they have to either provide for a client if somebody wants to exercise it. Everything beyond that, they're going to be in trouble. They got to pay for all that upside if the stock ran up that high and went past that. Well, basically, that's what happened with AMC and GameStop. Yep. At the time where it took off, that gamma, what they did, it was genius, right? But it wasn't like we didn't notice that. A lot of us noticed that. That's how you gamma squeeze any stock. What you do, if a stock hasn't been rated for a whole lot of option activity because it's been trading in a narrow range and pretty much, in a lot of cases, hedge funds have beat the stock down and it's pretty much got a lot of investors trapped, right? Because they just feed off of it like a dying slowly scenario, like the Chinese drip torture with rain hitting you in the forehead, right? They had beat a lot of the option markets contract flow down to a small window or parameter of things that they can control because the market makers were playing inside of that, right? So what happened was AMC had a gamma, meaning an end result, end strike price that was written. These are contract writers that's writing this.
What you got?
Of only somebody mic open. Somebody mic. You good. Over. I got to catch y'all for y'all say something. You know what I'm saying? Like, hey, baby, I see it. No, look, baby, don't do it. So AMC at that moment had a gamma. Matter of fact, let's run the AMC since we're talking about it. Even though it's not going to be that now, but I'm just going to show you what I'm talking about here. At that time, it had a gamma or a strike price contract written no higher than $20 a share. $20 a contract. Only $20 a contract at that time. And this when the stock was trading at $2, $7, $2 and all that stuff, $3 at that time. They didn't account for anything above that because they feel like the stock was obviously whatever, right? Left for dead. Market makers, hedge fund was shorting it. It was pretty much left for dead. It was pretty much all but out of there. Everybody started buying, not just the $3 strike price. They start lowering up on the $20 strike price, the highest contract you can buy. They top side weighted that contract to that perspective. That means the stock started moving anywhere towards that and short start covering. That means the market makers had to pay each individual either account for those 100 shares that the contract was worth per contract, right? Or pay them people out when they close out that contract ahead of exercising it if the stock obviously ran up and near that price. They got caught with their hand, what they call the pants down. Same with GameStop. GameStop at that time had a last contract. I think it was around about $100 and some odd dollars, and it went all the way to 500. Crushed hedge funds, crushed them. Almost put a couple of them out of business. Melvin Capital. What was the other one?
Was it Credit Squeeze?
Credit Suisse. They had contracts in there. Well,
I don't know. I'm just asking because I know they just had some stuff last month. I don't know if it was due to GameStop or not.
No, it was. I'm trying to think of the. I know Melvin Capital's one because y'all heard about them. They actually had to go to testify before Congress because all that had happened. It was that. It got that ugly. It was ugly. I forgot the other company. Outside of Citadel, was another company that was a smaller subsidiary hedge fund, but they got, mangled, and they still been getting mangled ever since to date. They still just been whooping these hedge funds. They still haven't figured out how to bring these Wall Street guys down. Whatever. Now look at the strike price. It's always 125, right? For this particular contract that's expiring on this, let me see, make sure that, for this week, right? Now at that time again, the strike price for that week for AMC and GameStop in the beginning of the stage, GameStop was like 20, and I think AMC was 20, and I think GameStop was either 90. God, I want to say like about $90, 65 or $90 for that strike price at the end.
Okay, let me ask you this because you just opened me up to something. So,
and they do. And I don't mean to cut your wisdom real quick, but guess what? They're trying to do it again. See right here? For show you. See right there?
Yeah, that's what I'm saying. Like this shit, I did not know. Like, so that's what I was about to ask you. I thought people was just buying the stock up, which made the stock price rise. They was buying the last strike price on the option to make
options.
Okay, that's what's up.
This is the back door how Wall Street makes their money.
Okay.
They call these complex derivative assets. That's what they call them. Go ahead, Ober.
What's this option y'all talking about?
Options is another way that you can trade the market. It's called options trade.
Yeah.
It's basically a derivative of an asset. It's a sidebar ownership of an asset in contract form, meaning you're writing the contract, and that's to be able to take ownership of these shares or dispense these shares to somebody else. So it's like the dice game, right? You got the side bet to the dice game, or if you at a racetrack, you side bet, jerk on if I'm a gapple person, or you going, well, let you know one from the South, right? Right. All right. Now we got the NDRA, National Dunk Racing, going on in the South now. Shout out to everybody from the state of Florida, South Carolina, Georgia, Alabama, whatever. Anyway, but that's what it is. It's a sidebar bet to the asset of the actual common shares itself, right? Basically what it is, though, I know the word bet scares a lot of people. It's more so just saying, hey, you get a chance to buy this stock at a much cheaper price if you missed it before, at a much cheaper price, but you got to pay the premium for it. And that's that the stock is obviously going to be able to mature over a certain time frame to give you the right to now own it at a much cheaper price. Say, for instance, you want to be in AMC back when it was $5 a share. But right now, what's the price of GameStop? $37.90. So if you want to take ownership of this stock at $5 a share for 100 shares, because you get 100 shares per contract, that's what it is, 100 shares per contract. You buy it down here deep in the money. You're gonna pay the $33 for this contract, though. Basically, $33 times 100.
Yeah, you definitely got to move the decimal point over in this one. So
definitely an option.
It'll be $3,300
for this contract
for one.
Right. So if the stock moves anywhere net delta positive from where you bought it at, right? Preferably, it has what they call a break-even price. If it clips that break-even price, right, to the upside, because you're betting that the stock gonna go up. In this case, I'm using the word bet because in this case, you're hoping the market moves in that perspective, because it might be something that's driving it too. I'm just saying, just for the sake of the conversation, if it does that and clips that break-even price, guess what? You can exercise that contract now and take ownership of this stock with a fresh 100 shares at what? $5 entry price.
But you gotta buy 100 at $5 though.
And that's what I'm saying. You get the $100 $100, 100 shares worth. But keep in mind, that's 100 shares of a stock at that price, right? So if the current price right now is $37, let's say it moved up to like $40, right? $40 a share, right? In terms of common share, right? So that means that's $100 at what? 100 shares times what? $40, right?
Mm-hmm.
So that means you're gonna pay what? So what's 100 times 40? Anybody?
4,000.
So you got to put up basically $4,000 to be able to cover what? The cost of those 100 shares of ownership to now have an entry price of what? $5 a share.
Mm-hmm.
Now, what's the net positive of that? What's the net positive of that, brother? I could just buy the 100 shares now at 40. Well, if you buy it now at $40, right? If you buy 100 shares right now at $40, it's going to cost you again how much?
4,000.
$4,000, right? So, but your entry price is going to be what?
$40.
$40, right? Right? And not what? $5. $5 foot long. Yeah, look at him. You want the cheap, right? It's again discount. We discount shopping here. We're strategizing to be owners at a much cheaper price. So
now,
everything.
Talk about how you don't have to exercise it, because a lot of us, we don't exercise it. We just take the premium.
Right, and that's just basically what it is. You just sell the contract before it hits the expiration date.
Yeah.
So the same way you see that date up there when we were saying, well, what's the date? What they call the tentative date that you have to honor this contract to that seller that wrote it to you. Well, the date is already there based upon right here. See right here, expiration date at the top here. That's just basically what you got up until that time to either make a decision to sell the contract, roll it over into the following week, or exercise it. Right. So that means you got to make sure that you front and center. That in most cases, like some of the brokers are so smart, they'll send out a notice to let you know, hey, you got this contract that's expiring today. What you gonna do? You gonna exercise it or not? Because if not, they'll just try to exercise it. But if you don't have enough money to exercise it in your account, if you mess around and slip and forget, guess what they're gonna do? You're gonna have to pay for that out of margin, right? Yep. Or they're gonna just liquidate your account to pay for those shares. Because the onus is on them at that point, because they trusting that you're gonna fulfill your end of the bargain because it's a contract.
And you gotta buy them at that.
You gotta buy them, right? Because they're gonna incur that cost if you don't, right? So they're just gonna take it out your account.
Webull, I will say Webull, they got a option on there to where you don't have
Robinhood too. They give you like a notice. They'll let you know like, hey, it expires today. Or like I say, better with Webull. Webull actually does have it where you can set it to not exercise.
Right. That's what I was gonna say.
Or
you can set it. Yep.
Mm-hmm.
And you just collect the premium. That's it.
Yeah. So
or lose.
Well, it depends on how you got it in and what's the deal with it. But that's and saying all that though. But that's why I say I love it from this perspective, because it has a lot of fail-safe mechanisms in play. So we're not talking about at the dice game, at the racetrack, at the store getting a lotto ticket where that thing go to zero, right? That's a flip of the coin scenario. This is not flip of the coin reality here. This is strategy. This is understanding. This is technical understanding. This is a fundamental understanding. It's a sentiment understanding of what the other overall market thinks about this asset, and you get to move under the understanding that you're trying to provide, or what they call seeking alpha, right? Seeking alpha is a net positive gain. You're trying to see what's the exponential growth of this particular asset at any given period of time allotted that it has to go out and perform as a business model or as a instrument where other people are getting excited about it, and because of the very nature of that, it's also driving the price up. Right? So the rules of engagement are very clear here, right? Very clear here, right? You're working within the confinement of things that you can manage, understand the risk factorization, and then you setting up a premise down saying, okay, I got this $4,000. Let me buy 4,000 shares here. I like, where the stock company's going. It's been holding pretty well at or around this price point here. I think I can start my good position here. And I'll say to myself, okay, I'm only willing to incur, no more than a 20% loss in this investment in the case if it doesn't perform well at what I want. So if I lose 20% of $4,000, well, how much is that? What's 20% of 4,000? That's about $800, right? Right. You're willing to lose only $800 in this investment. So that way, if it doesn't work out, well, guess what? You don't lose all your money. You just lose $800. You just start now. You're working from what $3,200 as opposed to $4,000 because it obviously must didn't work out. Now that's just a normal number. You could set a 5% loss. You could set a 2%, 3% incurred loss ratio that you're gonna do what they call an automatic stop loss on your investment or your trade. It's an automatic triggering thing that triggers it and sells it if the stock ever comes back down and hit your threshold. Hence protecting your money or your investment. And you just have to re-strategize and get back in at a lower price or a better price, which is better price if you get in lower anyway, right? But either way, there are fail-safe mechanisms in place to protect your capital. Unlike if you buy the lottery and you miss trying to get that Powerball, you don't get nothing back. But the paper that you bought, you go burn that for some fire starter paper or something. I don't know. But y'all get the gist of what I'm saying. I mean, some of you guys already know this stuff, of course, but I'm just speaking in terms of how a lot of this stuff works out. So it is a strategy where you're learning how to be very stationary, very concise in your thinking. Your modus operandi out here is to be able to turn this, right? Trying to make $1 out of 15 cents. I repeat, you're trying to make $1 out of 15 cents. Yet nobody can bar you from this opportunity to do just that. Crypto, Forex, equities, mutual, whatever you trade, bond market, you have just as much opportunity as a Warren Buffett, right? A Paul Tudor Jones or David Tep, whoever your favorite investor is, right? That's whatever. You have just as much as opportunity as they do. True story. Right? So again, that should excite you guys. You should start looking at your money in a whole different perspective now. Do I feel comfortable blowing this money on this when I possibly can put it to work over here? I use this little conversation or naggers when I say juggle off, on the way from work, right? Got a couple little snacks in the car, but you ride by KLC, that smell, that scent hit you. You want like, man, I'm only quarter mile from the house. Know you got food at the house. You're gonna stop and blow $5 on a $5 fill-up box. That's supposed to be in discipline and going home and eating. And you could have put that same $5 into what? Into the market. Dogecoin, whatever you choose, right?
I'm talking. I literally did that. when I heard you say, I was like, man, I'm gonna try that, man. And that shit work out, man. You ain't never lied.
It's spare change that adds up. Think about your penny jar or your coin jar that you may have at your house somewhere, right? You're storing your coinage in, right? It's the same thesis. Now you're just using legal tender as another way to kind of use that rollover spare change or taxation that you get off the back of expenditure, using that to fuel your investment with. They got apps that actually do that for you. Acorns, one of them, many others. They invest your spare change, literally. They invest your spare change for you. Think about that. I mean, this stuff is crazy, man. This stuff is crazy. It's crazy awesome in a good way, right? So, yeah. So, matter of fact, another scenario, right? Somebody mentioned this stock earlier. This is a stock that we've been in. Of course, I've been posting all over the YouTube, over the Facebook lately. Y'all know probably tired of me seeing me post about this little stock. But this is a little stock that we've been in. This is one of our little lottery tickets that we've been in. It's one of these same little scenarios like Dogecoin in a lot of ways, but it's an equity as opposed to that of an option in this trading in the OTC market. Same scenario, right? I've been in this stock. Of course, I have an entry in it. Of course, y'all know how this still work. Disclaimer, all right? My entry is, and they actually rounded it up because they just did the ticker symbol, and they made it into a 6. I had the 0005. 6 something like that, and they rounded to 0006. But that's my entry price on this stock. I've been in way back here, right? Way back. I got the back.
Can't see that.
It's not showing.
No, I can't see that.
Oh, dang it! Sorry. Thank y'all. Keep forgetting. Thank y'all, brothers. I get going, man. Okay, here we go. All right. So, So, CPL's a Catapult Solution. Obviously, it was a reverse merger SPAC company. Basically, it's a company that was a shell company that got bought by, it was a defunct company, meaning it was still traded under the CUSIP number that was still legible and legal. The company just abandoned its business So by very nature, that just because a company bans their business, don't necessarily mean the company's stocks get dissolved or those shares get dissolved, right? They sit actually in a brokerage house or a firm, legally tied to that company, but it's actually in what they call a lien form, like a house is a bad note. And there's companies that go out there and find these companies, buy them, clean up any kind of toxic debt they have, basically clean them up and put them back on the market to be sold as a walk-in business with share structure that you have to go through the loan process of doing, like an IPO and all that, and it's a heck of a lot more less cheap. We're talking about over 75% cheaper way to bring your company to business or to investment world publicly than going the old traditional way. And so that's what people are doing. Y'all probably been hearing about the reverse merger of SPACs that are now taking over. This was one of those scenarios. I've been in this company here since 2017. Yeah, I think it was 2017 when I got in. It was called AWGI at that point. It was a company that did ambient water. They actually did what they call renewable water. It actually was a good business. They just didn't have enough capital to scale. It was a good business model. I'm not lying, right? But whatever. For whatever it was worth, they kind of, business went on. The shell structure still stayed in place. I sold it at a time when I bought some. I sold some. I bought some. I sold some into a move that it made because it was a spike. It was something that we got, we heard about on one of the shows I was with at that time back in the day. And I kept some of my shares in it, right? Lo and behold, they got their ticket punched. The company that bought them or bought the company out or bought them and cleaned them up and took them from defunct status to now legal status was a company called Corporate Reviver Solutions, right? They buy these companies, fix them up, and sell them to other bigger companies that want to come to market. Well, okay, we talking about 0005. I think I shared it with the family because this is not investment advice, it's just my opinion, or entertainment. I shared with our group, our investment group, our little family, whatever, when it was trading at around about, 005, 006 a share. Meaning double at around this area, right around here is when I started sharing it with our group. Now, keep in mind, it was investment opinions and not investment advice, right? Just say, hey, here's something to look at. Right. So anyway, y'all see what happened here, right? Was waiting for it to be solidified in essence where it could be bought up by a merging company that wanted to be a part of, of a founded scenario structure already in place to save them money. And recently, one of the past products that this company here actually worked with in the past turned around and said, I want to be able to have an opportunity to get a foothold in American markets, right? Because it was a Japanese company called Next Meats, right? Next Meats, kind of like Beyond Meat, Impossible Burgers. This is a faux meat company out of Japan, right? That did the same thing with a previous business that they used the same company with to start their business with over in Asia. Now I wanted to get into the American market to be listed on the NASDAQ, not the OTC market, but the NASDAQ, which is a more expensive market to be listed under. And they're as of now, it's still in the air, but this is me somewhat, speculating what's going on at this point based on, the filings that I've seen, the SEC filing. They're looking to get into the SEC, the NASDAQ as a publicly traded company listed for their next project in terms of being able to expand their meat market, this faux meat market, into American side of the house to compete with Beyond Meats, Impossible Burgers, people like that. Now, the previous company or the company that they are right now, but before that, there was another company, but this was the company, what it used to be, what it is today. And before it merged, before it was trading just like the other one, right? You see right here? It was trading at around 5 cents. It was down here, I think, at over here, I think it was like 0007 back on what? The 20th of May of last year, 0007. They got word that there was going to be find a company that was interesting, want to merge into this old shell company. It got bought, and the stock, in this case with the Next Meats company, it went from basically 0007 in the month of May of 2020 all the way and hit a high of $14.50. Literally about 9 months later. So roughly, it went from 0007 to $14, right? Well, I do a minus because you go to minus that to get the differential in price, right? It went to $14.50 a share off that merger and expansion of this business model in less than a year. Now we talk about that Dogecoin percentage gain value, right? But what's the percentage gain value in this? What was the percentage gain value in this merger? And that basically less than what Dogecoin did, right? Dogecoin took a year and 2 months to get 21,000%. This right here did it in about 9 months. But what was the percentage gain they got out of this? Anybody? Anybody want to tackle that one there? Show you the power of a potential good investment or opportunity. Anybody want to tackle that, challenge themselves? No problem, Brother Jay. I see you in the YouTube side. Hey, I got you. You already know. Over. Connect with me, man. You already know my particulars. Hit me up, man. You know I'm here. I'm trying to get back on, coming back on YouTube. I've been putting it off for a while. I'm working on it. All right, we'll get back to what we used to do. But yeah, so let me get back over here really quick. So yeah, so you're talking about $14.50. Right? So, and trying to come up with, well, basically trying to figure out what this percentage value is in terms of growth. Anybody want to tackle that in terms of percentage value? I know some of y'all probably got busy. I about that after hours. It's 5 o'clock. Yeah, we got training coming up here in shortly too. Let's see. Let me go over here real quick. So you got 1450 divided by 0007, right? So what is that?
2,000 something. 2,000. 2071.428571.
So 14.5 divided by 0.0007, right?
Right.
So what you end up getting over?
You say $2,071 or that's percentage, right?
Yo, cause we're trying to get the percentage value. So
yeah, so that's 2,071%.
So think about that for a moment. Now, you got to move some decimals, right? Because you're dealing with whole number integers here. You already know you got 1, 2, block integer, and here you got what? 1, 2, 3, 4, 4 or 5 different integers on that side of the house, right? So constructively, we're going to have to move those zeros over to account for that, right? So, of course, you can do the longer division and do it that way, or just do 14.5 divided by 0.0007, right? And then you still got to account for the other value of the decimal places to a degree, right? So let's say you do it that way. In natural form, you come up with what? 20,714.285714,286, right?
Right.
Then you got to account for what is it? Let me see here. Now I messed math up here. 14.5.0007. So we have 20,000%, right? So 20,714, right?
So that's it.
So 20,000% value gain and that little bit of time, right?
That's to the moon. That's what that is. That's that to the moon they be talking about.
Substantial gain, right? Substantial gain value, and essentially, that little bit of time, right?
Sure is.
We talking about crazy numbers and a fraction of the time. a fraction of what it would take, right? Again, just crazy, crazy values of opportunity that allotted to people who are going through finding these assets, figuring out, what's my end goal here, right? What's the potential, gain in this, right? Let me do this over here. All right, so let's say, so from a math perspective here, come back over here. Hold up, let me move that for 1 second. Let's see here. So let's say we do 14.5 minus, because we're trying to figure out what's, potential value in terms of cost share structure, what it would be to make a certain amount of money. So you do 14.5 minus 0.0007, right? That basically gives you what? 14.49993, right? Because you want to make sure you keep those numbers, those 993, because that's money way out there, even that far out, right? So for instance, let's say you bought, I don't know, $1,000. We use that same $1,000 we use Dogecoin, right? $1,000 worth at 0.0007, right? How many shares did that give you? Right? If you had $1,000 and you want to buy the stock at 0.007, how many shares can you get with $1,000? Right? So you're definitely dealing with an aspect of what? Division to a degree, right? Because in that moment, you're trying to what? Get share structure, right? Trying to figure out what the share structure or share lot size would be in that perspective. So that's 1,000 divided by 0.007, right? Or in this case, since it's not a whole, it's an improper fraction, I should say. It's set up in an improper fraction way, right? Right. You're trying to make sure you get, the complete value in play here, right? So you got was it 70? What was that, like 700,000 shares, somewhere around there? Let me I'm gonna pull up my calculator. Times 1, and we move the decimal over. Let's see, 7, 1, 2. So like 7 million actually. So you're like 7 million shares, right? Like 7 million shares, right? At that price point. That, whoo, man. Yeah, because 47. Let's see. Make sure I'm doing this right myself. Well, let me check this here. Yeah, it's like 7 million shares, if I'm not mistaken. Yeah. That is crazy, right? We talk about the ideal of just, being able to own that many shares of a stock at that price, and it goes up $14 a share. $14 a share now. Let that marinate for a moment. I'm checking something really quick here too on the back side. Let that marinate for a moment. So, check his position, and that is a lot of potential money that you could be taking off the table in that moment, right? So these little assets like this here, of course, are just, they're all over the place, right? Let me take this off here and clear this off. Clear all this. Got up now on Zoom. I keep forgetting. I got to take it off my little trade view chart. It would be still up there next day. All right. So these little assets like this, again, they just provide a golden opportunity. We like to call them lottery tickets in their own little way, because a little bit of money can go a long way if you put it in the right place, right? But that's what they are. So this little company again, CPSL, because some people ask me to talk about. I'm gonna talk about tonight on our little training. I got training tonight actually in here in a little bit. So get ready to log off here in a minute on YouTube so I can get ready for that. But these are things that we're talking about, right? Now this stock is starting to break out because it's airing apparent that pretty much the deal is pretty much done, right? We're just waiting on the ink to dry for this company that was, bought, a previous defunct shell company through this same company, Corporate Revival, turned around and spent money with them again, did business with them again for another one of their instruments to help this Japanese company get into American market and not just be listed on OTC, but they're trying to get into the NASDAQ to build these bigger power players like, again, a Beyond Meat. So that means they get more attractive buyers in one of the most lucrative exchanges on the planet in the NASDAQ, because it's, obviously NYSE is first, then, it's the NASDAQ. That can attract all type of investors. Now, could the stock potentially go to $14 a share? Whatever. That's speculative. We don't know. The other one did. Don't necessarily mean this one will, though. But it very well can. Whatever, right? It did it over a period of time, of course, but I'm just saying. So a lot of people that's in this stock that got in it, when we was kind of talking about it, when I was talking about it, they got in around 0.005, 0.006. Of course, they're well up over 400, 500% right now. I think I'm up over like 6,000% right now, somewhere around there. My percentage is up now like by 6,000% as of today. Matter of fact, let me check it real quick. I haven't even checked it today. I was too busy hitting Tesla across the head, getting the bag off that, and then trading that TAL. Let me see right now. Thank y'all for being patient with your brother too. This is what we do. We're working a little bit, right? Off the scene, but on the scene. But this is what we do. So, ain't no make excuses for that. We want to be, positioned properly and know what's going on. All right. So, yeah. So, as of now, yep. So, yeah. So, yeah, got to be. It went up nicely today. Actually, got a nice little bag off it today in profit. So, yeah, as of now, I'm up 6,000%, 6,000.69% in this trade, right? And so, yeah, if it goes up to 10 cents, it's at three pennies now. 3 pennies came from 000 down here. If it goes to 10 cents, y'all can do the math from there and just keep going on and on and on and on. But again, just like Dogecoin, you can also find that in some of the equity stocks too. The same way, right? The same way. And there's a lot of them out there little like that, but you got to be willing to put in the work to find them. Sometimes being in the right place at the right time matters too. That's a part of the game, right? That is a part of the game as well. All right. So, we're going to see how this work out. Keep eye on. There's many others out there that we've talked about before, discussed. So anytime, we're able to come on, speak about some of these things, we're going to, speak about them, share them with the family. Of course, it's not investment advice, but it's just opinions. We're just trying to share opportunity with a lot of people to look at these things in a different light, right? A different manner, right? So that way we can always find, value in being able to kind of come behind it, do the research, and figure out if it's a good opportunity or not, right? Because that's basically what we're trying to do here. We're trying to, get our slice of the pie, right? We're trying to get our piece of the pie, right? And they say, however how the saying go, right? Get your slice of the pie, whatever. Like I'm eating some blueberries. Forgive me, guys. Shouldn't be eating while I'm on live. I'm eating some fruit. But that's it, guys. So It's been a good little build, guys. I got to get a log off because we got training coming up here shortly. So I got to make sure I get everything situated for our training sessions tonight. Again, like I said, you do want to be a part of it. You know, hey, I do offer what they call trial services sometimes too, where I just kind of give you the opportunity to come in on the trial service, see how we train. If you like, what you get out of it, same way how you can see us building here. Then like I said, it's only $30 a month, right? So it breaks down to $1 a day, right? Just to show your interest level. That's basically what it is. It's not to get rich out for you, to show your interest level in it. That you want to, get some good quality information, some training, and if not, there's other people out there doing it too, that can deal it, help you get yourself situated. That's all it's all about. Right? It's about getting people excited about opportunity in terms of how we view it, and we're taking advantage of it or leveraging it, right? So I'm excited to be a part of this and be a part of you guys' journey. Again, I'm your peer. Don't look at me no more, no less than that. I'm your peer at this, right? We all peers at this, right? Because again, there's no way where I can know everything, and there's no, I can look at you like you don't know a lot, right? You just maybe I haven't kind of realized it yet, but through time you'll realize that there's a lot of strength that you can pull from each other when you just kind of sit and think tank together, right? And so that's why I say you need each other. You need other people. You need your tribe or group that you can build with so you can get better and learning how to be thorough at this, right? So anytime you see me go live on YouTube, definitely tune in. I'm always excited to have you here. I'm always humbled and honored to have you in the building. And, definitely come back. Go ahead, Oben. I'm sorry.
Yeah, I said thanks for showing up, man. I needed to see you today.
Yeah, no problem, man. Okay, you guys, how we roll over Zane. So anytime you see your brother go live, man, definitely if you got time, pop in, man. Let's help you, get you where you need to go because you're already ahead of the game than you give yourself credit for. You right, you just got to keep going through that preparatory stage, right, and you'll get there. Right.
Yeah, I'm gonna link you on Facebook to get your cash app and information about the training.
No worries. Like I said, you already know how I go, man. I'm just humbled and honored to be able to share it. So that's it, guys. So get ready to get into a little training. Closing words. We got any closing words from the panel guys here before we get out of here? I know Open Chris got class too, so he'll be in there. Right. And the closing words. I guess everybody kind of situated and got their cup full for the moment so far. All right, so that's it. So I guess keep you guys in longer. So thank y'all for tuning in. Everybody in the back chat, everybody over there. Brother Ramsey, over Brother Mathis in the building. Brother Jay was in. Again, a family Blue Cousin came in the building today. Everybody came through the panel today. Brother Satapara, Brother Brandon, Ilba Angie came through. My cousin, Brother Marcus, he came through today. All right. Who else? We had Sister Playheart. Eventually, she came through and graced us earlier today with her present. Our family T. Arca came through today, right? Family from the Dagger Squad side of the house, right? Who else? We had a family of knowledge, one love came through the building. All right, and everybody else. If I missed you, of course, don't charge to to my heart, right? I just might have missed it. All right. So next time, guys, see y'all till then. Peace, power, and profit. Shemo Tep. Again, let's get paid, guys. Let's get paid, guys. Peace, everybody. Peace, family.